is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everybody, live from the Bloomberg Interactive Brokers studio. We are streaming on YouTube. We are also on Bloomberg Quick Take. It is, yes, Monday, November 28th, getting ready to wrap up the month of November, just a few days. Tim Stenovic, my co-host, is on assignment today, so joining me for the next 3 hours is Bloomberg Market Senior Editor Mike Regan. And Mike, I'm calling it the Fed 1-2 punch because we had two key voices, Jim Bullard, John Williams, both coming out in speeches around the same time today that the U.S. Central Bank has more work to do to curb inflation. We saw it take down the equity markets, and we saw it also take down the bond market.
Yeah, you know, and the market wasn't very happy even before the Fed speakers with all this chaos in China.
It's like Humpty Dumpty on the wall. I can go either way. It's kind of that thing.
A lot going on.
A lot going on this week. We're going to get into it in just a moment. And with that in mind, we're going to talk about the job market riddle, a great story on the Bloomberg. That is the Bloomberg big take, if you will. Also, we're going to talk, Mike, about President Xi's dilemma, those protests. And then we've got another crypto collapse.
Another, BlockFi, another crypto lender. I guess not a good year for crypto lenders at all. So
No.
Another one bites the dust.
I feel like a lot's getting shook out of that market. We're going to talk about Black Friday fatigue. We're going to talk travel trends with the CEO of Priceline. And then we've got the author of The Art of Conscious Conversations. He has worked with Tesla and Tesla's teams before. I'm curious what his advice would be to Elon right now as he's making some comments about Apple and more. So we got lots to cover on this Monday. First up, though, let's get a check on that trading day. Let's get to Charlie Pellet. And Charlie, kind of near lows.
Indeed, absolutely right, Carol. Lows of the day right now for the Dow, the S&P, and NASDAQ. You guys chatting briefly about crypto. Bitcoin right now down 2.5%, just above 16,600, but the Dow, the S&P, NASDAQ, all in the red to begin the new trading week, with the S&P right now down 56, drop there of 1.4%. Dow Industrials lower now by 1.3%. We have got the Dow down 444 points. NASDAQ Composite Index also in the red, tumbling now by 154 points, down 1.4%. Year to date, as the year winds down, we have got the Dow down by 6.7%. The 10-year yield, 3.69%. Certainly a lot of Fed speak today. The 2 years yielding 4.46%. Spot gold right now down 8.10, $17.40 the ounce, while West Texas Intermediate crude is up 1% right now, $77.08 a barrel. Oil climbing to an intraday high, with OPEC and its allies expected to consider deeper production cuts when they meet this weekend. Ellen Wald is senior fellow at the Atlantic Council. She told us she is keeping an eye on Saudi Arabia.
If anyone is going to have a sense of when China is going to need more crude oil, I do think it would be Saudi Arabia. So if Saudi Arabia is sending signals that they don't think oil demand is going to increase very much over the course of the winter, then that could be an indication of China's COVID policy.
And while oil is higher right now, we do have oil stocks lower as a group. ExxonMobil, case in point, down 2.4%. ADRs of BP down 1.1%. Chevron down 2.2%. EOG Resources down 3.3%. Pioneer Natural down 3.5%. And briefly, Nord Stream, which operates the Russian-led Nord Stream 1 gas pipeline, has revised the end date for the unplanned outage to April 1st of next year. That according to Reuters, which cites the company. Again, recapping, stocks lower, S&P down 1.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Let's get to the market drivers report. And let's set your Business Week agenda with Jess Menton, Deputy Team Leader for U.S. Equities at Bloomberg News. She's in our Bloomberg Interactive Broker studio. So, too, is Kriti Gupta, Anchor and Markets Correspondent here at Bloomberg. Hey, Kriti, kick it off with you. So we're near our lows. Charlie worked that out for us. What's moving the trade today?
Well, a mixture of things. Now, I think there is this kind of idea of just selling off completely in the equity market, and a lot of it is led by some of your losses in big tech. You're talking about your Apples, your Microsofts, and your oil companies, by the way. Mm-hmm. Look at your Exxons, your Chevrons. They are both sides of the spectrum kind of leading the losses here, and I think that's significant. We talk about breadth leading the way upwards. This is quite the exact opposite, where altogether every single sector is really taking a hit, and this comes down to China. This is the China trade, because a lot of the narrative, the geopolitical narrative of deglobalization and kind of nearshoring, none of that has actually happened, which is why you see a lot of these production shortfalls in Tesla, in Microsoft, and Apple, and some of the chip companies, and that is what is driving the trade lower today.
Jess, isn't this supposed to be a bullish time of year? I was told this was supposed to be a bullish time of year.
Where's our Santa rally?
Yeah, where did the Santa rally come in
Still
October?
November. We got December to get through.
Yeah,
Right.
what's going on here?
So it is obviously seasonality-wise, like you mentioned, Mike, it's supposed to be a bullish time of the year, especially at year end. But I mean, still, if you're looking for the month at the S&P 500, still higher coming off of the back of October, where the S&P 500 had closed that month up about 8%. But still, even with some of the Fed speak that we heard today, say with James Bullard, he was talking about how the markets are underestimating the odds of higher Fed rates. And then on the other side
Well,
of
what
that,
was interesting about him is, he was pushing out not only next year, but 2024, that rates stay up.
yes, he was reiterating this view that the Fed should raise rates to at least 5%. And then we did hear from John Williams as well, who said further tightening is needed to cool inflation. But a lot of what they were saying isn't necessarily different than what they have been saying. And something that I thought was interesting, at least when I've been speaking with my sources, they were pointing out about how Bullard had said the strength as far as just looking at what's happening in the labor market, and also with potentially those signs, hopes for peak inflation, it could give Fed officials room to pursue a disinflationary strategy. And with the backdrop of, say, the MLive survey that came out recently for Bloomberg, there was the biggest concern among the respondents was that next year could be the big risk being stagflation. So when you hear those comments from Bullard about, hey, this could help us pursue a disinflationary strategy, that to them is actually a positive sign. And then also Williams had reiterated that basically he thinks that inflation could fall between 3 to 3.5% next year. So even though you'd think that some of the comments that they said today could be perceived as a negative, there were actually some positives in there that the market might be overlooking.
I always go to the dots function on the terminal, and I note the letters MH next to James Bullard, most hawkish. So take that for what it's worth.
Well, and he's been really out there front and center, right, when it comes to
has.
inflationary concerns, which is why his voice, it feels like, is so important. There is a lot. Speaking of important voices, this week, Creedy, we've got Jay Powell on Wednesday giving a speech to Brookings. He's supposed to take, I think, questions as well. We've got a jobs report coming. We've got a lot of interesting data points, important ones this week.
Which could perhaps even support the idea that there is a real hesitation to hop in the market right now. A lot of people were kind of expecting that once the midterms were over, that's when you would see the bid. And traditionally you have. This time you haven't. And this time is literally different. And I feel like I'm jinxing the market by saying that. But you are seeing a real complacency and a real hesitation because of all the game changers that are happening. No one on Friday or on Thursday would have said over the weekend protests in China are going to break out. I don't think anyone could have called that to the extent that you're seeing, at least. I don't think anyone could have called this idea of what's going on in the oil market, that OPEC plus, some reports are suggesting now that a cut might be on the agenda, even though hikes were reported just 2 weeks earlier. The target is shifting so quickly, and I think that's really feeding complacency and a lot of people closing out their positions for the year.
Yeah, Creed, quite a reversal in the dollar today, too. When I got in this morning, it was weak. Now it's up about half a percent, according to the Bloomberg Dollar Index. Is that just your typical risk-off move, do you think? Because we have seen a lot of dollar weakness in the last month or so. Is this a turning tide, do you think, or just a risk-off day?
Well, I would say zoom out, because if you actually look in the overnight session when all of these kind of China headlines were really coming out fast and furious and the entire global market was dropping, the dollar was actually dropping too, and I think that's really interesting. And I think that tells you...
It's up a little bit right now.
It's up now, and I think if you actually look at it next to the 10-year yield, it is a mirror chart. So it tells you that the dollar isn't actually following your traditional haven bids, which I think Mike was getting to, but instead it's following those interest rate differentials. The idea that the Fed is still in charge. As the yield goes up, the dollar does too.
I'm just going to say, listening to Surveillance this morning, there was a guest, or it was maybe Surveillance in another show, somebody saying the bond market's getting ready to rally, somebody saying the stock market's getting ready to rally, which those two typically don't just run in tandem.
No, they don't. And another key, just from a technical perspective, there's been, back in August, the S&P 500 got really close to its 200-day moving average. Right now, that it's downward sloping, so it keeps continuing to fall, but it's around 40.54, and we had gotten pretty close to that. But right now, even if somehow there's a rally and the S&P 500 does break above that, whenever I'm talking to technicians, they're actually looking at 43.25 because that was the intraday high on August 16th, basically during that counter trend rally over the summer.
Right.
That's where it peaked out. So they feel like if we're going to break that 200-day, it really needs to break further above that.
All right, I'm just watching January 13th. That's when JB Morgan comes out with earnings. So that's my next focal. Jess Manton, Kriti Gupta, thank you so much. All right, let's get a check on world and national news. Off to D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol, you've been talking about it. Barely a month after granting himself a third five-year term as China's leader, Xi Jinping is facing the wave of public anger over his zero-COVID policy. Kerry Brown is a professor of Chinese studies at King's College of London. He tells Bloomberg Xi is facing some tough choices.
The Chinese government needs to get out of the current policies. They're not working. But the question is, can it do it quickly enough between, on the one hand, having a full-scale breakout spike of the epidemic, and on the other, having huge public discontent at lockdowns, which people are really completely fed up with now.
King's College professor Kerry Brown, China's zero-COVID policy has disrupted business activity and is likely to result in an iPhone Pro production shortfall of close to 6 million units. Well, lawmakers are back in D.C. this week, and the race is on. Bloomberg's Amy Morris reports they have 2.5 weeks to fund the government.
Step 1, agree on top-line defense and non-defense spending levels. Those talks aren't resolved and are likely to heat up after the December 6th runoff for Georgia's Senate seat, which will tighten the deadline to about 10 days. It would not be unusual for lawmakers to pass a short-term continuing resolution that would extend the deadline toward the end of the month, as neither side wants a government shutdown. The deadline for now is December 16th. In Washington, I'm Amy Morris, Bloomberg Radio.
At the World Cup, Serbia and Cameroon played to a 3-3 draw. Ghana defeated South Korea. Brazil won its game against Switzerland. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. I'm Carol Masser, along with Bloomberg's Mike Regan. Tim is on assignment today. He'll be back tomorrow. We're going to talk a lot about Fed policy this week because, Mike, we've got Jay Powell on Wednesday giving a speech to Brookings. He is supposed to take questions, and it comes just a few weeks before our last Fed meeting of the year.
Yeah, it's this interesting push and pull that we see. The last time we saw Jay Powell speak after the meeting and then read the minutes, the message seems to be, oh, we're going to downshift to 50 basis points from 75. Don't call it a pivot, but
right.
a downshift. Now we get speakers out today that kind of going the other way. The Fed has this difficult balancing act that they don't want to loosen financial conditions too much. They don't want stocks taking off, that sort of thing. So
yeah.
Today it seems to be a little bit of a pushback on that sort of loosening idea.
Well, and it'll be interesting to see kind of which message we get, because sometimes with Jay Powell, like the statement will come out from the Fed meeting, right? And the markets take it one way, and then we go into the press conference, and the statement and the press conference in particular, and all of a sudden the markets go a different direction because of either Jay Powell's softening or hardening in terms, and sometimes that happens. So,
yeah, absolutely.
So it's kind of, we try to figure out maybe from some of the Fed speakers. Two important ones today. Federal Reserve Bank of St. Louis President James Bullard saying financial markets are underestimating the chances that policymakers will need to be more aggressive next year in raising rates to curb inflation. But he's talking 2023 and 2024.
Right, and Bullard on Monday reiterated his view that the Fed needs to at least reach the bottom of the 5% to 7% range in the Fed's interest rate, benchmark interest rate. So, 5% is not that much higher than where we are. That's basically 2.5, 50 basis point increases from here.
So chill out, everybody?
Yeah, I think so. Not much different than what the market's pricing right now.
Don't sweat the small stuff. You also had John Williams of the New York Fed, also influential voice. We're talking about voting members, so we care what these guys say, saying rates could come down in 2024 as inflation falls. So trying to make sense of it all. You're listening and watching Bloomberg Business Week on this Monday. Carol Masser, Mike Regan, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a down day on Wall Street right now. Lows of the day for the S&P 500 index. The S&P is now lower by 1.5%, down 59 points. The Dow lower right now by 449 points, a decline there of 1.3%, while NASDAQ is down 175. That is a drop of 1.6%. Stocks are falling on concern China may have to tighten its COVID curbs further. Also, Federal Reserve Bank of St. Louis President Jim Bullard says markets may be underestimating the chances of higher rates. 10-year yield 3.69%, with the 2-year yielding 4.46%. Spot gold down $14 the ounce to $17.40, a drop there of 0.8%. Crude reversing earlier losses. West Texas Intermediate crude up now by 1.5%, $77.40 for a barrel of WTI. So again, recapping, stocks lower. S&P right now down 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So appreciate Charlie. Thank you so much. Well, we've got one of our most read stories on the Bloomberg. It also happens to be today's Bloomberg Big Take. It's about a U.S. job market riddle that is at the heart of the coming recession. So let's get into it. And also today's Fed chatter, if you will, with Bloomberg News economics reporter Rich Miller. He wrote the story that is on the Bloomberg. He is on the phone from our Washington, D.C. bureau. Rich, good to have you here with Mike Regan and myself. Before we get into your story, which certainly plays into the Fed chatter, what do you make of John Williams, of Jim Bullard, and then the coming conversations we're going to get from Jay Powell this week, or at least one in particular?
Well, Jim Bullard is in the class by himself, right? He's been sort of actually at the forefront of pushing for higher and higher rates and faster and faster moves up. And true to form, that's what we saw from him today. John Williams is in the sort of what people call the troika, which is the top three center of the Federal Open Market Committee. So right at the moment, that's Jerome Powell, Lael Brainerd, and John Williams, and they're seen as kind of the the movers and shakers, so to speak. So he was more cautious, and as he I think more or less echoed the line that we heard from Chairman Powell a few weeks back, that we're going to step down, we're going to go from 75 to 50, but we probably were going to end up at a higher spot than we expected we were going to end up in September when we had the last economic projections in the SEP. So you wouldn't expect him to try to front run the chairman when we have the chairman on Wednesday. So
got to know when you're a backup dancer, right?
Right. Whereas Jim Bullard, he's a president. He has got a little more leeway, freedom, and I think he also sees himself as somebody trying to push the conversation within the Fed.
But he was out front and center, right, when it came to inflationary concerns. So an important voice.
He was.
Yeah.
He's been you could say a thought leader. But as I say, Williams is more in line with what I would think we might hear from Jay Powell on Wednesday.
Yeah, Rich, the market doesn't seem to like these comments today, but at the end of the day, does it change the calculus at all of what we expected last week, which is, a 50 basis point increase in December and sort of a peak Fed funds rate of about 5%, maybe a little bit higher than 5%? So that seems to basically be the base case everyone's expecting, even after these remarks, right?
Yes, but Bullard is the one who's sort of pushing, 5% may not be the peak, and, we may even go up a lot higher. And again, because of what Carol was just mentioning, that he's been out front and ahead, that then raises little nervousness, trepidation, or whatever among investors that, hey, maybe he's telling us not where the leadership thinks they are going to be today, but where the leadership will end up being next year, and maybe we should, pay a little more attention to it. So I think I think you're right. The consensus is still, as you sort of said, we'll end up at around 5, and we'll go 50 at the next meeting. But, he's injected more uncertainty into that than he did with today's pretty explicit remarks.
Makes it also interesting in what's been a really boring year, right, Rich? No, I'm just kidding. Okay, so let's get to your story. It is the Bloomberg Big Take, so important to what's going on and what we talk about every day about what's going on in the labor market. Tell us about the Big Take in your story.
Yeah, I mean, we sort of it's a bit of this strange thing, right? We're heading to what, not just to the U.S. but globally, what is probably one of the most anticipated recessions ever, at least that I can remember, and yet you still have, for the most part, businesses trying to hire, businesses complaining they can't get the skills in. Of course, you've got a lot of sort of high-profile names like Amazon, Apple, Goldman Sachs announcing layoffs. But when you speak to most other companies, they're still complaining. Well, we can't get the people in. We're still short of people, and that's of course especially true in leisure and hospitality. If you go to any restaurant these days, right, they're short of waiters, short of help, etc. So it's kind of might make this recession, if indeed we get one, a little less painful for workers. We've got some numbers in the story, courtesy of our friends at Bloomberg Economics, that say, across sort of major industrial countries, you might see unemployment go up 3 million. That's still very, very painful to people, but, when you go back to 2008, 2009, unemployment went up like 14 million. So that just gives you an idea of, this is still going to be very painful, but it's not anywhere near going to be as bad as we thought. And, workers may turn out to be a little bit bad. And we're starting from the other point is we're starting from a very low unemployment rate. The unemployment rate in the States is 3.7. The unemployment rate in the euro area is the lowest it's been since the euro area began. So, yes, it's going to be painful, but, maybe not jumping out of the window painful for workers.
Rich, I think one of the dynamics at play here is that so many people just dropped out of the labor force during the pandemic, and that really tightened it up. Just quickly, in about 30 seconds or so, is there any risk of those people finally coming back, or are they gone for good?
There's some may come back, but history suggests that once you start taking a Social Security check, you don't come back.
You don't come back.
Right. So a lot of them just sort of retired, I guess.
Yeah, and I got to say, Rich, one of the things I keep hearing from some CEOs about labor hoarding, like not wanting to let go of workers, even if they see some slowdown, because they know it's going to be tough to bring them back. Rich Miller, thank you so much. So comprehensive about Fed speech and, of course, his great story, the Bloomberg Big Take on the Bloomberg. He is economics reporter at Bloomberg News.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Any shopping, Mike Regan, this past weekend?
I personally did not do
You
any.
did not?
I'm like a Christmas Eve shopper. That's my style.
Pressure. Think of Billy Joel, right? The pressure's on. We're going to talk about what happened on Black Friday and maybe get some ideas of what's going on this Cyber Monday. I've seen lots of promotions out there, but we're going to check in with Patrick Brown over at Adobe. They've got lots of data that gives us a great insight into holiday shopping. All right, first up, back to the markets and Charlie Pellet.
Thank you very much. Familiar theme, lows of the day again, Carol. We have got the S&P down 62 right now, drop there of 1.5%. The Dow down 473, down 1.4%. NASDAQ down 180, a drop there of 1.6%. Stocks are falling on concern China may have to tighten its COVID curbs further. Also, we've got Federal Reserve Bank of St. Louis President Jim Bullard saying markets may be underestimating the chances of higher rates. Right now, the 10-year's yielding 3.69%, with the 2-year 4.46%. Spot gold down $14 the ounce to $17.40, drop there of 0.8%. West Texas Intermediate crude, though, reversing earlier losses, up now by 1.2%, $77.19 a barrel. Retailers eked out modest growth over Black Friday weekend. Deep discounts allured shoppers seeking a reprieve from stubborn inflation. In-store traffic ticked up 2.9% at brick-and-mortar retailers compared to 2021. Now, this is according to preliminary data compiled by Sensormatic Solutions. Victoria Fernandez is Chief Market Strategist at Crossmark Global Investments.
I know the numbers were not as strong on Black Friday as a lot of people thought they would be. Some of that, I mean, for my household, we stayed home until late because we were watching the World Cup game, U.S. versus England. We didn't even hit the mall until around 4 or 5 o'clock in the evening. So perhaps there were some things going on that people didn't go out quite as often. I think today will be an interesting time, Cyber Monday. Let's see what kind of sales are there. Let's see what kind of promotions we're getting.
And we'll have more with Patrick Brown of Adobe coming up in just a moment. Among retailers, truly a mixed day today as investors take apart the weekend results. Macy's, case in point, down 1.9%. Target, though, up 0.8%. Walmart up 0.4%. Kohl's down 1.7%. And Gap down by 3.2%. Again, recapping, stocks lower. S&P down 60, a drop now of 1.5%. 10-year yield 3.69%. And that is a Bloomberg Business Flash.
What a great setup, Charlie, for our next segment, talking about those retail names and how they are trading. There's a Bloomberg opinion piece today that talked about Black Friday fatigue, how it's a warning sign for retail. In the column, it was noted online sales during the crucial kickoff to the holiday season reaching, though, a record 9.1 billion. This is according to Adobe Analytics, but the 2.3% increase from last year's supply chain crunched season tepid compared with 13% in 2020 and 19% in 2019. So in-store traffic apparently is similarly insipid. So let's see what our next guest has to say about all of this, because he has tons of data that makes him an expert on holiday retail shopping. Back with us, we welcome Patrick Brown, VP of Growth Marketing and Insights over at Adobe. He's with us on the phone from Burlingame, California. So Patrick, nice to be with you again. How are you?
I'm doing fine. Nice to chat with you again, Carol.
So tell us, you were on with us in early October. Talk to us about the retail environment, how it's changed, gotten better, gotten worse since then.
Yeah, so, I mean, we've seen, the strength leading into Black Friday, was really driven by the discounting. And discounting started each year. It seems to start earlier and earlier. And this year, we saw consumers, or retailers rather, starting to discount as early as October when we had a Prime Day. And what we've seen is those discounts just stayed low, and they've stayed, continuing through to Black Friday. And while Black Friday year-over-year perspective, was only a 2.3% up year-over-year, it did exceed $9 billion online. And what's happening now through the weekend is we're seeing the demand actually online accelerate. So Saturday and Sunday, we saw the equivalent of a Black Friday in sales, $9.5 billion, which is up about 4.4% year-over-year. So, and then leading into Cyber Monday, where we think the strength is going to continue on to be about a 5% year-over-year growth. So
I think as retailers continue to deeply discount and figure out where consumers are have got some demand across some categories like toys, they're leaning into the discounts and driving some growth.
Patrick, when I hear the word discount, as a cheapskate, or I guess frugal shopper, some may call me.
Smart shopper.
My ears perk up at discount. But are there any certain categories where you're likely to get better discounts this year? And are they all gone? Or are there still discounts available for the rest of the season?
Well, it's a great question, and I think smart shopper is the right word. I'm similar. I mean, we've seen the discount started, like I mentioned, in kind of with Prime Day in October, and then what's happened is for categories, especially around Cyber Monday, where you see electronics, like traditionally has been a really core, deeply discounted category, 27% discounts. But toys continues to kind of rule the day for Black Friday and through the weekends, where we see up to 33% discounts. But sporting goods, 20% down, jewelry. Interestingly, one of the categories that we're also seeing come up as consumers are more comfortable buying larger products online is furniture. Furniture and appliances, believe it or not. We're seeing discounts and seeing some demand where discounts are in the 10 to 15% for even those products.
Do I have to wait 12 months, 6 months to get my couch, though, if I do that?
Well, thankfully, I think, last year it was all about there wasn't really very good discounting, and it was all because of supply chain. Retailers just didn't have things in their shelves or in their distribution centers to fulfill some of the demand, so they had to keep prices higher. I think in some cases, retailers are working off a bit of an inventory glut, so they are using this to manage some of their demand. They're spurring growth with lower prices, but I think you will actually get your couch, and it won't be 8 months.
Hey, one thing I want to ask you, if you have any thoughts, I mean, if this extreme discounting continues, and I think about the retailers, what that means for margins and what kind of numbers we'll see ultimately when they, in the new year, report their fourth quarter numbers. Because I was in Saks just walking through on Friday, on Black Friday, didn't buy a thing, but spend $150, you get a $75 gift card. And I'm thinking, wow, that's great for the consumer. It also guarantees you're going to come back and spend. But I mean, that's got to hurt retailers.
Well, I mean, they are managing their inventories, I think, like you're alluding to. So they're able to kind of, it's better to sell some product and drive some future growth and drive some LTV where somebody can come back and potentially, be a future shopper even in the coming year. I think, interestingly, even though if you're in the store, one of the things that we're observing, or maybe it's World Cup related, mobile shopping is eclipsed 52% of the sales through Black Friday and through the weekend. So even as people have been out, they're still purchasing, maybe not in a store, but they're buying online, and they're just finding themselves the way that they're buying is much more fluid. And so I think that retailers are driving volume and driving demand. There is consumer demand out there. I think they're leaning into it with discounting.
Right.
And I think that's likely to continue into the coming December.
Those cell phones are dangerous, I always say, It's so easy to go
sure.
click and buy something.
Click.
It's gotten so good, the technology, I agree.
Until your spouse is like, do you know what you just did in like the last 20 minutes? Patrick Brown, good to check in with you, and hopefully we will again over the holidays. VP of Growth Marketing and Insights over at Adobe on the phone from California. Let's get back to World and National News. Nancy Lyons, she's in our 99.1 newsroom in Washington. Hey, Nance.
Thanks, Carol. The gunman in the Buffalo supermarket mass shooting back in May has pleaded guilty to all the charges, the state charges. Authorities say 18-year-old Peyton Gendron targeted the Tops Friendly Market because it was in a predominantly black neighborhood. He killed 10 people and wounded 3 others. This is Gendron's defense attorney, Brian Parker.
Before he is sentenced to life without the possibility of parole on February 15th, the surviving victims and deceased victims' family members will all have an opportunity to address the court, the community, and our client directly.
Brian Parker says his client's plea represents a condemnation of the racist ideology that fueled his actions. Hawaii's Mauna Loa, the world's largest active volcano, is starting to erupt for the first time in nearly 4 decades, prompting volcanic ash and debris to fall nearby, U.S. Geological Survey scientist Ken Hahn.
It's going to be very fluid and fast-moving lava.
Hahn says the chances of the lava flow interrupting the tourist industry, though, is very, very slim. Congress is returning to Washington this week for the remainder of its lame duck session. Top priorities include keeping the government open past December 16th by passing a spending bill and reauthorizing annual funding for the Department of Defense. In the Senate, Democrats want to codify same-sex marriage and pass a bill aimed at protecting elections. The number of Americans smoking cigarettes is reaching a record low. A new survey from Gallup puts that number at just 11%. At the World Cup, Serbia and Cameroon played to a 3-3 draw. Ghana defeated South Korea. Brazil beat Switzerland. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You are listening and watching Bloomberg Business Week on this Monday. So I always say, I've said it before, I love Peter Atwater, who's like, yeah, he messaged me, he's over at William & Mary. He's like, you got it right when it comes to Elon Musk, because we're kind of wary and weary.
Wary and weary. We're not alone either.
It's like a new series starring Elon Musk. So a couple of things. He's been making some comments about Apple. He says Apple has cut back its advertising on Twitter and even threatened to withhold the social network from its app store, suggesting that a fight is brewing between the two companies. Here's what he tweeted, Elon Musk, today. Apple has mostly stopped advertising on Twitter. Do they hate free speech in America? He then posted again and included the Twitter account of Apple chief executive Tim Cook with a question, what's going on here? A few minutes later, he claimed that Apple might boot Twitter from its app store, quote, but won't tell us why. I don't believe Apple, as of this point, has yet responded.
And even over the weekend, Musk was tweeting that, hey, if he has to, he'll develop his own phone to compete with the iPhone. So always a new plan from him. And European Union also, their privacy watchdog came out today and said they're very concerned about Twitter now that so many of the staff have either been fired or left. They're just worried about basically the security of it. And quote, we're very concerned about what we're reading in the media. We have written to Twitter this morning seeking answers. So really causing some waves with all his sort of dislocations at Twitter.
I think safe to say when it comes to leading on privacy concerns, oversight of social media, it certainly has been the European Union. And I feel like the U.S. is following. And some of the concerns, Twitter's top data watchdog in the EU said it contacted the company on Monday seeking answers to a number of questions and assurances about its continued compliance with EU law. So they want to make sure that the oversight is there and that they're following whether it's privacy concerns, data concerns, you name it, right?
Yeah, and I think way more regulations in the EU to worry about than here.
Later on, we're going to talk with somebody who has worked with Tesla. We're going to see what he has to say about all of this. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pella. We've got stocks lower across the board right now, bouncing along the bottom with the S&P right now down 59, drop there of 1.5%. Dow Industrials down 1.6% right now. That is a drop of 467 points, while the NASDAQ Composite Index down 169, a drop there of 1.5%. 10-year yield 3.70%, with the 2-year yielding 4.47%. Spot gold now down 0.8%, 17.40 the ounce, while West Texas Intermediate crude is up 1.3%, 77.25 a barrel. Stocks lower as Fed officials stress that more rate hikes are coming, with risk appetite also hit by uncertainties around China's COVID curbs and their impact on the global economy. Again, recapping, stocks lower, S&P right now down 59, a drop there of 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much going on this Monday, and especially when it comes to Apple. As you know, we've been following the protests over the COVID-0 lockdown policies in China. Related to that, a Bloomberg exclusive, a Bloomberg Big Take, a story in the upcoming new issue of Bloomberg Business Week, which will be on newsstands later this week, already on the Bloomberg terminal and online at bloomberg.com/businessweek. It is about Apple's reliance on China specifically and how it is growing perilous because of the chaos in the world's second largest economy and a country that churns out tons of Apple products. So let's get into it. With us is Joshua Brustein. He wrote the story. He's technology editor at Bloomberg Business Week. He's here in our Interactive Brokers studio. Also with us, the editor of Bloomberg Business Week, Joel Weber, on the Access line in Brooklyn. And I do feel like, Joel, things are heating up when we think about exposure to China when it comes to manufacturing. And when I think about that, Apple, they've got a lot of exposure.
Yeah, we've talked a lot about where Apple has some challenges right now. Recently, did a story about the labor situation in Apple stores in the U.S. But the circumstances that have been sort of unfolding over the last week really are. I mean, this is just has become a huge story, and of course, where Apple gets its iPhones predominantly has been from Foxconn facilities in China. And with the COVID-0 situation in China and sort of how the country and company have responded, Foxconn, to the circumstances, it's really led this to be a white-hot situation. Josh, what transpired that, and what were you guys watching as you started to pull this story together?
Yeah, the largest iPhone production facility, known as iPhone City, is in Shenzhou, China. About 80% of the latest iPhone 14 models are produced there. And since October, they have been experiencing a COVID outbreak within the plant. This is an enormous place. About 200,000 people work there. And Foxconn, which runs the facility, attempted to lock the plant down, isolate workers who may have COVID, and try to keep the outbreak from spreading. The problem was they weren't really prepared to handle this, and workers were complaining of unsanitary conditions, of being held in places where they didn't have access to adequate food. Hundreds of workers left the plant in October, and last week there were some violent protests from workers who were protesting that they were not going to get paid if they didn't stay through a certain amount of time. One of the measures that the company's taken to try to keep churning out these phones.
Yeah, and Josh, you described the dormitory sort of pretty awful conditions during this lockdown, but these are pretty coveted jobs in China, are they not?
Yeah, absolutely. I think that there were workers who were leaving jobs last month that it was surprising, because people get these jobs and they're known as good jobs. And I think that what's happened over the recent past has been that the COVID situation has really changed the way that this production facility operates, and people thought they had something good and now feel like they're being really mistreated.
And Joshua, forgive me, you were the editor on
Yes, I was
this
the
story,
editor,
so my apologies for giving you props. But I do, we're rethinking this pushback against globalization, and I feel like the eyes are on Apple right now and watching what they are doing, and we have seen them, begin to branch out. How does you and your team kind of think about what's going on with Apple specifically and what it means more broadly?
Yeah, absolutely. I mean, if you want to look at a situation for a company that kind of represents something larger, you have the world's most valuable company. It makes an enormous amount of phones in China, and what you've seen Apple do is look to diversify. Foxconn, its main manufacturing partner, is moving to other countries, to India, Vietnam.
Which is interesting because Foxconn is a Chinese company?
Taiwanese.
Taiwanese,
Yeah.
Okay.
So you see it looking for alternatives. If things aren't going to be, if they can't count on China, they need to know where else they can get phones from.
So what's the status now, Josh? It sounds like it's just chaos there. Are they actually still, are the assembly lines still working, or is it sort of in a frozen while all this plays out?
Yeah, so the facility is still working. There are clearly disruptions. We've reported that someone familiar with the operation says there could be a production shortfall of close to 6 million iPhone Pro units this year. The thought is that maybe they could recover that next year, but these are serious production interruptions, and Apple has already been dealing with this even before the acute problem of the last couple of weeks.
And Josh, some of the reporting was incredible because of how specific and inside the operations and the protests we were able to get. What stood out to you as you worked on the story?
I think it was really interesting to hear from some of the workers who were there. The story that we're publishing focuses on one worker who had been making phones for a decade, finally got fed up in October and left, went home, was lured back by more money, and immediately was actually in a quarantine period when these protests broke out last week, and then decided, I can't stay here. Like, I came back, I'm going to go find a job at a different place. And immediately was actually in a quarantine period when these protests broke out last week, and then decided, I can't stay here. Like, I came back, I'm going to go find a job at a different place. As he said, other people are hiring.
Well, you talk about, these workers, or the team talks about workers in isolation. There's no food. There's trash piling up. I mean, sounds like pretty horrible conditions.
Yeah, absolutely. And I think that what you're seeing is a breaking point. I mean, at one point we describe they built barriers between the dormitories and the production facilities so that people basically couldn't stray or run away, basically, in between home and the job. And I don't know, that's pretty dystopian.
Feels a little bit like a prison.
Absolutely.
Right, and also it sounds like COVID was sort of running rampant through the whole area too. Is that true?
Yeah, it sounds... From the reporting we had, it seems like there's a lot of uncertainty. I don't think that that the people running the plant are really telling workers what's going on. A worker that we interviewed talked about being put in isolation, even though he was never testing positive. That some people are kind of in and out, in isolation and out of it. There's not a lot of talking between workers allowed, so people are talking in code words about who has COVID, who might have COVID. I mean, it seems like really not being handled well.
Hey, Josh, just long term here, no doubt Foxconn and Apple have this long-standing relationship with China, but what other options does Apple and Foxconn potentially have in the long term?
So Foxconn is already making more iPhone 14 models in India, more than any previous generation, and it's expanded into Vietnam and Thailand as well. And I think that's a sign of how much Chinese policies are potentially hurting China itself. At the same time, Apple's spent decades building up this production capability, and it's not like it can just turn off this switch and turn one on somewhere else. If it really wants to reduce its reliance on China, it's going to be a long-term project.
Yeah, this is just fascinating in terms of what's going on, right? And we're watching Apple so closely. We're going to talk more about China and the protests. Andy Brown, a former Bloomberg colleague, he spent more than 30 years in China. He's going to come up next. But this story so much sets the scene. Thank you so much. Our thanks to Joshua Brustein, technology editor at Bloomberg Business Week, on this story. And our thanks to the editor of Bloomberg Business Week, Joel Weber, on the Access line in Brooklyn. This story in the new issue of Bloomberg Business Week.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes to go in the trading session. Romaine Bostic here alongside Scarlett Fu. Stepping into the arena is Carol Master and Mike Regan for our global simulcast, and we welcome our audiences across Bloomberg Television and Radio as well as on YouTube and Quick Take. And Carol, looks like a start to the week that is a little bit dour. Some of this, of course, being shaken up by the sentiment with regards to China.
Yeah, absolutely. Negative tone, no doubt about it, here in the United States. Hard to ignore the videos that we've seen out of China and those protests specifically, which makes me scratch my head in terms of the Chinese names that trade here in the United States, because they are actually rallying and basically gaining back some of the ground that they lost on Friday. If you take a look at the NASDAQ Golden Dragon China Index, it is up 3% in today's trade, up almost 30% since late October. The thinking is that maybe because of the protests that the government could ultimately shift away from those COVID-0 policies. We know that they've been a drag on the Chinese economy. You also had Pinduoduo, top of the NASDAQ 100, e-commerce platform, third quarter numbers beat. So that stock is rallying 13%. So that's propping up the trade there, certainly among those names. And NetEase, also top of the NASDAQ 100. Video game company, of course, another Chinese name, and that one is up about 2%. So overall, we continue to see, Mike, outperformance among those Chinese names that trade here in the United States.
Yeah, Carol, obviously some weakness, too, in Bitcoin, along with all risk assets today. And this is after BlockFi, the crypto lender, filed for bankruptcy. Not too much of a surprise to the crypto industry. Everyone knew BlockFi was in trouble. They had suspended withdrawals. You did see Bitcoin really sort of dip after the news and touch right around that 16,000 level. But it's sort of snapped back. It's down about 2%, Romaine, but off the lows. So clearly that bad news was mostly priced in.
All right, 39.65 right now on the S&P 500. Of course, coming off what was a pretty strong week last week, at least in terms of percent gain. Of course, we know that the low volume week sort of distorted what we could read out of that price action. The Dow Jones Industrial Average down by 1.5%. Similar story for the NASDAQ and the Russell 2000. Scarlett's phone is ringing right now. Do you need to take that?
No, it's Jay Powell.
Is it Jay Powell? What does Jay Powell have to say?
On Wednesday.
Is the pivot coming? Is that what he's called?
Scarlett is very connected,
the word pivot completely. It is a broad retreat right now, Jay Powell calling notwithstanding. We have almost 7 stocks down for everyone that is higher across the New York Stock Exchange. When you look at the 11 industry groups in the S&P 500, all of them are down. When you break it up into 24 industry groups, all of those are down as well. Now, the better performing companies are those in the consumer sectors, whether it's staples or discretionary. Retail, for instance, is only off by 0.2%. Auto is only off by 0.3%. Yeah. But on the flip side, the big losers on the day are real estate, investment trusts, and also energy, interestingly, even though oil has recovered.
Yeah, we take a look at Chevron. The shares continue to move lower. There has been a lot of talk here about the demand picture coming out of China. Chevron down about 2.5%, despite that deal announced by the Biden administration that they would be allowed to extend that contract to pump Venezuelan oil, though we should point out the amount of proven reserves that they were pumping prior to the ban is really just a trickle as to what we get out of just one single well in the Permian Basin, something like 15,000 barrels a day. Apple shares lower by about 3%. A lot of concerns about iPhone production amid the protests there in iPhone City and some of the surrounding areas. And then keep an eye on Shopify. I thought this was interesting. We talk about the retailers that continue to move higher. Shopify up about 3%. You know, I used to dig around through all these SEC releases. That's how I started my career. Always boring. This was the SEC release that Shopify put out. It was literally one line, and it said, cha-ching, Shopify merchants break Black Friday records with $3.4 billion. Cha-ching. And that was it. That was the entire filing.
Did they really say cha-ching?
That was cha-ching. I don't make this up. I don't joke, Carol Master. This was it. But anyway, it really highlights the idea, too, that when you talk about the companies that are benefiting from this season, and it actually is some of those smaller businesses and some of those marketplace platforms like Shopify as well. Is that so, Carol?
It's a small market cap company.
Yeah, well, a lot of people use it.
Yeah, not Shopify. I'm looking at Taboola.
Yeah.
Oh, okay. The last one on that list there.
Well,
did you not do? You didn't do it, did you?
No, I didn't because I was trying to move things along, but you've kind of slowed us down.
Well, sometimes you have to slow it down so we can all lean in and win.
I know, you love
All right, so let's get to, are you done with your movers?
No.
All right, let's get
I
to
got 3 more.
Oh, do you?
No.
Okay, let's get to what I'm calling the Fed 1-2 punch today, because we had 2 very influential voices come out. We're talking about Jim Bullard and John Williams. John, of course, of the New York Fed, Jim Bullard of the St. Louis Fed, but someone who's been out there front and center when it comes to very early on about the inflationary concerns and the Fed needing to fight it. Well, Jim Bullard making some comments. They both kind of talked about the need to continue to bring down prices. Bullard saying specifically about the Fed being higher for longer in a webcast interview with Market Watch and Barron's. Here's what he had to say.
I think we probably have to stay there all during 2023 and into 2024, given the historical behavior of core PC inflation or Dallas Fed trim mean inflation. They will come down, I think. That's my baseline, but they probably won't come down quite as fast as markets would like.
All right, Jim Bullard, president of the St. Louis Fed. So 2023, 2024 in terms of rates maybe staying higher. And Williams came out too in a speech and saying that officials have more work to do to curb inflation, just saying it remains far too high. So maybe kind of a opener, if you will, guys, right, to what Jay Powell will say on Wednesday.
And we should point out that Lael Brainerd, actually some prepared comments came out from her just a few minutes ago, kind of reiterating what she said before, basically the idea that they need to continue down this pace. And we should point out that most of her comments are based off of her presentation she gave back in June, so it just kind of updates that.
This is all just a drumbeat to Jay Powell speaking on Wednesday. And then on Saturday, guess what? No Fed officials will be talking because they have a media blackout.
Oh, okay.
Yeah, starting Saturday. Maybe Fed officials talk on Saturday. I'm not sure, but we don't have to hear from them anymore because they'll be in blackout period.
But it's the troika, right? Williams, Brainerd,
Yes.
and then, of course, what Powell says. Those guys are just so key in terms of what happens with Fed policy, Mike.
Right, and I'll point out that, the market isn't really budging as far as Fed fund futures, still looking like a peak of 5% in the Fed funds rate in June. So as much as the stock market seems to be freaking out about it, Romaine, the short-term interest rate traders are, it sounds about the same to them as what they thought last week.
Yeah, it'll be interesting, though. I mean, we've had a lot of conversations here about whether the markets have priced in the risk of what the Fed is doing and whether they've priced in the economic recession risk as well. Of course, we know that Bullard was referring to the equity market, but you sort of wonder as well whether the bond market and some of the options markets have priced in enough of the pessimism as well.
Well, that reminds me of the call that Goldman Sachs made saying that their model implies 39% odds of a U.S. growth slowdown, while risk assets currently are pricing in about 11% odds, which means that there might be more recession fears, recession scares coming up in 2023. That means a lot more volatility that we can look forward to.
Yeah, great. Good stuff. Good stuff. And when does the market start to look ahead? All right, guys, we've got more to come. We'll continue our conversation, our cross-platform coverage on TV, radio, YouTube, and Bloomberg Quick Take. We will be back to count you down to the close on this Monday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we will be back with our TV colleagues, Scarlett and Romaine, there on the TV side. We'll count you down to the close at 4 p.m. Wall Street time. And let's not forget things to get into, Mike. We've got a bunch of economic data on housing. We have GDP. We have core PCE. We're going to get the jobs report on Friday. We have JOLTS before that in terms of jobs openings, job openings specifically. And then we've got the beige book. So a lot for investors to turn over.
Yeah, especially that housing data, I think, is really going to be front and center. S&P CoreLogic Case-Shiller Index expected to drop 1.2% month over month. So it's those higher interest rates really starting to bite.
Yeah, exactly, right? I feel like every day on the Bloomberg, we've got a bunch of stories, certainly when it comes to the housing market. I'm just going to pull up the S&P 500 home building super composite index because we have seen it under pressure. It's down another 1.4% in today's session, but we get it, right? Those higher rates that we've got from the Federal Reserve in particular have definitely impacted the mortgage market. But I will point out that home builders have been rallying since, let me just take a look here, since about late October. So we have seen a bounce off the lows.
Yeah. One other really interesting economic data point this week is the JOLTS job openings. Like we talked about with Rich earlier, still expected to be 10 million job openings in October, the latest numbers from the JOLTS job openings. So, recession or not, that job market is still red hot and really kind of a unique sort of situation, I think, for most of our lifetimes.
Yeah, definitely a conundrum then for the Federal Reserve, right, who says, okay, we can keep on maybe raising rates because the labor market continues to be strong. They're not too concerned about it.
Right. Is it really a recession when you have near record low unemployment? It's a weird scene.
Someone has said to me, We could have a recession, though, with the labor market, a tight labor market. So put your head around that one. All right, let's get back to world and national news. Nancy Lyons keeping that on her radar. She's in D.C. Hey, Nance.
Thanks, Carol. China's economy is slowing because of COVID lockdowns, and now leaders there are dealing with surging protests against that policy. Well, despite all those challenges, China is still viewed by Congress as a threat.
A major legislative action in the waning days of this session will be the authorization of $840 billion in next year's defense spending. Henrietta Trace, political analyst for Veda Partners, pointed out in a Bloomberg interview.
When they start debating the National Defense Authorization Act, there are several amendments that are already pending to that bill that pertain to China, that are about national security threats, are about, for example, TikTok and whether or not it can be on federal government employee computers and devices.
Much more contentious, Trace said, will be the Trump-era business tax breaks that are expiring unless Congress extends them. In Washington, Irv Chapman, Bloomberg Radio.
Green Sprouts is recalling more than 10,000 sippy cups and baby bottles because they pose a risk of lead poisoning. The company says the recall impacts 3 products, the 6- and 8-ounce stainless steel cups and bottles that were aqua, pink, green, and navy. The Consumer Product Safety Commission says the bottle's bottom base can break off, exposing a solder dot that contains lead, posing that threat of lead poisoning. Well, you might not believe this, but Merriam-Webster's word of the year is gaslighting. It's the act or practice of grossly misleading someone, especially for one's own advantage. Merriam-Webster says gaslighting has in the last few years become a ubiquitous term, particularly in the age of misinformation. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. Gaslight. Have you seen the series Gaslight with Julia Roberts?
I haven't seen it. Any good?
Yeah, really, really good. It's on Netflix, and it basically takes you back to the Nixon administration. Really well done. Sean Penn's in it. Yeah, very cool, very cool. Anyway, I digress, but I was thinking about what Nancy Lyons said about gaslighting. Have you ever done it? Have you ever
Gaslit anyone?
Yeah.
Why would you ask that?
Are you doing it to me right now? All right, we're going to get off of that and talk about a story that is among the most read on the Bloomberg in the past 8 hours. Has to do with Carlyle Group, planning to raise at least $8.5 billion for a new private credit fund as it competes with rivals to snap up lending business abandoned by banks. The Washington, D.C.-based firm has held early discussion with the investors about the new vehicle. It's dubbed Carlyle Credit Opportunities Fund number 3, ahead of its formal fundraising launch in 2023. This is according to people with knowledge of the matter. I heard Paul Sweeney earlier on Bloomberg, I think it was with either surveillance team or with Matt Miller, talking about what we are seeing. I think it was with actually in the 9 o'clock hour on Bloomberg Radio, just about the private credit market. Like, it is just exploding.
It's such a bigger market than I realized. I'm reading the end of the story. It's a $1.4 trillion market, and it's becoming, according to this story, the only option for many companies looking for debt financing in Europe and the United States. Investment banks have retreated from riskier lending because of the concerns about inflation and the economic slowdown. So certainly not a risk-free market, but one that's growing for sure.
Well, exactly. Private lenders looking to fill the void, piling cash into everything from fresh buyouts to loan refinancings. And I guess I just, you hope everybody's got good oversight and transparency, right? Because, you just wonder, right? The public markets tend to hopefully kind of weed through this stuff.
Well, I guess that's why, Carlyle looks to step in and sort of meet that demand and do the due diligence for people that want to dabble in the space. But it's risky for sure.
Yeah. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Fresh lows of the day. 43 minutes to go ahead of the closing bell, with the Dow now down by 521 points, a decline of 1.5%. The S&P 500 index down 68, drop there of 1.7%. And NASDAQ down 195 now, a drop there of 1.75%. 10-year yield 3.69%. We've got the 2-year yielding 4.47%, while spot gold is at $17.40 the ounce, down 0.9%. West Texas Intermediate crude up 0.9%, $77 even for a barrel of WTI. Stocks are sinking as Fed officials stress that more rate hikes are coming, with risk appetite also being hit by uncertainties around China's COVID curbs and their impact on the global economy. Recapping, stocks lower. S&P right now down 68 points, a drop of 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, nearly impossible to miss the video and pictures and stories about the protests that have erupted against China's COVID-0 strategy. We were talking about it with our TV colleagues in terms of the market impact. We talked about it earlier about Apple specifically, but it does represent one of the most significant challenges to Communist Party rule since the Tiananmen crisis more than 30 years ago. So great to have a voice back with us, a member of the Bloomberg family, to be quite honest. He's back in our Bloomberg Interactive Brokers studio. Andy Brown, former editorial director at Bloomberg New Economy, spent 3 decades in Asia as both China editor and columnist for the Wall Street Journal, Pulitzer Prize-winning journalist. He leads the China Hub as a partner at Brunswick Group today, a critical issues advisory firm. So grateful that you came back to Bloomberg to talk with us, Andy, again. So the disruptions, the protests, how do you think President Xi is what's the calculus around that for him?
First of all, Carol, it's great to be back. Thanks for having me. This is historic, the events in China over the weekend. And I think it is the beginning of the end of COVID-0. And it is going to be, I fear, a messy, chaotic, and deadly unwinding of an irrational, poorly conceived and disastrously executed policy that has Xi Jinping's name all over it. He owns it, and he owns the public outrage that led to this, to these street protests and campus protests all over China over the weekend.
So a mistake by Xi?
Look, it's an indictment of Xi himself, but it's also an indictment of the system that he set up. And it is a top-down, heavy-handed, personalized system, inflexible, ideological, highly politicized, at times brutal, and the system failed, and it's failed catastrophically. And the irony is that it has triggered precisely the thing that Xi Jinping most fears. So, for the first time...
Meaning protest, right?
Well, protest, but the type of protest. Okay. So, there are protests in China occur all the time, okay? But they're almost always localized, single-issue protests. Workers aren't getting paid in a factory, or in a rural area, some government-connected business has grabbed your land. A lot of protests. But they're never networked, right? And they're very easily contained. These are nationwide protests that bring together disparate groups of people, poor people, rich people, students, workers, together for a common cause, and that is to defeat COVID-0, which has led to enormous amounts of frustration within the population. And the trigger for this was a fire in Urumqi in an apartment block that killed at least 10 people, including, we see the picture of this lovely Uyghur lady and her children. And the suspicion was that they had got trapped in their apartment by COVID restrictions. So fire exits being blocked, or, and these concrete barriers that get placed around blocks so the fire trucks couldn't get in and extinguish the blaze. And this triggered something very deep, very emotional. That lady was everybody's mother, everybody's sister, everybody's wife. Those children could have been my kids, because you've got 400 million people in China now living under some kind of a lockdown, many of those in precisely those conditions. Their front doors have been welded closed because they can't get out, and people live in fear and have been living in fear now for a long time. And so, this fire just triggered this swelling sort of surge of anger right across the country. And it was so big, it wasn't, how clever they are, and how efficient they are at blocking discussion on social media. This outbreak, a burst, was just so passionate that they couldn't contain it.
I was amazed at the amount of video and pictures that we were able to all see throughout the weekend.
Yeah. Well, Andy, I wonder what the next few days look like, do you think? I mean, will there be an effort to suppress these protests, to put them down and sort of put people in jail and counterattack against the protesters? It seems like it could get ugly in the next few days.
Mike, here's the reality. Xi Jinping has no good options here, okay? He only has tough decisions, difficult trade-offs. So I'm pretty sure that with every fiber of his body, he wants to crack down, okay? I mean, he is haunted by the collapse of the Soviet Union, which, he blames. They lost their ideology, abandoned Stalin, repudiated Stalin, but they lost controls of the levers of power. They compromised, glasnost and perestroika. He's absolutely determined that is not going to happen in China. So he doesn't want his policy, his signature policy, to be derailed, to be challenged by street protests. And I'm pretty sure that they're already now, going after some of these leaders of the protests. But here's the thing: the more, if he cracks down violently, he could provoke an even bigger social explosion. People have had enough. I mean, they're really up to here with zero COVID. Now, on the other hand, if he opens up too quickly, he risks an explosion in cases and mass death. Even under the most optimistic scenarios, if they opened up like Taiwan did or Singapore did, because of the infectiousness of Omicron, and the vulnerabilities that you have in even a highly vaccinated society, you're still going to get, 1 million or more deaths. Now that's dynamite for Xi Jinping. The Americans lost a million, the Europeans lost 1 million. This proves, the decadence and incompetence and the corruption of their system, their careless system. But we in China have a superior system. Very few people died outside of the original outbreak. So he's got to be very, very careful. But look, the real problem here is that there has been a staggering failure, and it is the failure to build defenses against Omicron that they've been so fixated on zero COVID that they haven't invested in ICU beds, in trained specialist medical staff. But most importantly, they haven't adequately vaccinated their elderly population. And of course they have no natural immunity now.
So how do you, I've been hearing a lot of commentary that this isn't another Tiananmen Square, but could it get to that point?
So
is that a bad comparison?
Yeah, look, we've moved on, okay. And look, I wouldn't rule anything out, but we've moved on. The government has far more sophisticated tools now to counter dissent than they ever did back then. As I say, I'm pretty sure. Look, every square inch of every city in China is watched by a camera. They already know, who the leaders of these protests were. Voice recognition, face recognition, gait recognition. They're probably in touch now with their networks, with their professors, with their colleagues, with their families. But here's the other thing. the protesters are also pretty clever too, and they've shown a tremendous amount of ingenuity. So you see these students at Tsinghua. This was a crazy one where they're holding up a banner with a mathematical equation. And I guess you need to be and I'm not, you need to be a mathematician to understand that this equation was written by a mathematician called Freeman. Okay, it's Freeman's equation. So it was this sort of subtle algebraic cry for liberty.
Right.
You know, blank sheets of paper and so on.
Is Xi at risk of losing some of his political clout, which he just cemented, recently?
His model and his governance style are now going to be open to much greater scrutiny.
On a global stage?
Well,
or domestically?
Domestically, here's the operating model for Xi Jinping's China, okay? And it starts with this vast institutional capacity, endless sums of money, a bottomless pit of resources. It's all powered by high technology and animated by this whole of nation, mass mobilization. It's an awesome machine, right? But, it's capable of great good. You aim this machine at the problem of poverty and, you eliminate absolute poverty. And they've done it, right? And or you aim this machine at building world-class infrastructure and you get, within a few years, like the most extensive high-speed train network in the world. But it's also capable of great harm, right? And so you aim this machine at Xinjiang and you get the horrors of, internment camps and 1 million Uyghurs. You aim this machine at COVID and you get COVID zero, okay? And it's but it actually shows the limitations of this operating model because it has clearly failed, against COVID.
Andy, do you think if China had accepted the Western vaccines, the Moderna and Pfizer vaccines, would it be a whole different scenario here? Would they be able to open a lot less risky than they are now?
I think people exaggerate this point. Look, it's baffling, right, why they didn't take mRNA vaccine. It's the best-in-class vaccine, but it's not the game changer that people say it might be. Chinese vaccines are okay. They're fine, right? They do a fine job. They prevent serious illness. They prevent death. But that's if you have your 3-dose regimen, right? You get your 2 vaccines and your booster. The problem that they have is that they haven't insisted that their elderly get vaccinated. I was in Singapore this time last year, for the Bloomberg New Economy Forum. We were part of the reopening. And they were adamant about that. They weren't going to reopen until they had, and I can't remember what it was, 80 or more % of them elderly people. And they had a lot of resistance.
Right.
And they overcame that by telling the elderly, if you don't get vaccinated and you get ill, you're going to pay for your hospital treatment, right? So they put a lot of pressure on, but they focused on this.
Right.
Why China hasn't focused on this is something of a mystery.
Well, lots of mysteries, and it feels like every week there's something new coming out of China that certainly upends things, and we really appreciate you coming in to help us make sense of it. So, Andy, thank you.
Thanks, Carol. Thanks, Mike.
Always appreciate Andy Brown. Of course, he is partner at Brunswick Group. He is a critical issues and advisory firm. Andy, of course, former editorial director of Bloomberg New Economy, and so much more. We really appreciate it. Andy, thank you. Right now, let's get back to the markets. We're seeing stock losses accelerating. Here is Charlie Pellet.
Hi, thank you very much. We've got 30 minutes to go ahead of the closing bell, Carol, with the Dow, the S&P, NASDAQ, all in the red. Absolutely right. Lows of the day right now. The S&P down 69, drop there of 1.7%. The Dow down 538, a decline of 1.6%. NASDAQ down 204, a decline of 1.8%. 10-year yield 3.68%. The 2-year 4.46%. This update brought to you by SEI, Visionary Asset Managers. Find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS. Stocks are sinking as Fed officials stress more rate increases are coming, with the risk appetite also hit by uncertainties around China's COVID curbs and their impact on the global economy. Anna Rathbun is Chief Investment Officer at CBIZ Investment Advisory.
I think there are fundamental issues issues here with China's growth prospects as well as doing trade with them in terms of our companies that are multinationals over here. So I think there's definitely a fundamental reason for the sell-off.
And again, we've got the S&P down 70 right now, drop there of 1.7%, the Dow down 1.6%, NASDAQ down 1.8%. 10-year yield 3.68%, spot gold down 0.8%, 17.41 the ounce. Crude oil is higher after an earlier sell-off. We are seeing crude rebounding up 0.8%, 76.89 a barrel. CEOs of Kroger and Albertsons will be testifying before the Senate tomorrow about their company's proposed $24.6 billion merger. Kroger shares down 0.4%, Albertsons down 0.2%. Recapping, the S&P is lower by 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, good stuff. Charlie, thank you so much. Charlie Pellet there with a Bloomberg Business News Flash. All right, second most read story on the Bloomberg terminal in the past 8 hours has to do with BlockFi, the digital asset lender, filing for bankruptcy, the latest crypto firm to collapse in the wake of crypto exchange FTX's rapid downfall. With the significance of this latest decline in the crypto space, we've got Bloomberg News digital currencies and venture capital reporter Hannah Miller. She is with us from our 960 studio and bureau in San Francisco. Hey, Hannah, nice to have you here. Mike Regan and I back in New York. The news, tell us about it and the significance of it.
Yes, this is a significant update regarding the extent of FTX's contagion within the crypto industry. So BlockFi has filed for bankruptcy. This was a company with extremely close ties to FTX and Alameda Research. The company previously paused withdrawals on its platform, citing uncertainty related to the circumstances surrounding FTX's and Alameda's collapses. The company has now filed for bankruptcy. And we know that this is a huge development. We've kind of been expecting this. There's been a lot of talk of this happening. But again, it's a huge domino that has fallen within the crypto industry.
You know, Hannah, I think what's fascinating is why there is so much borrowing and lending in the crypto industry. I mean,
that's a good point.
Every week there's another one of these outfits that's in trouble. My impression is that it's all just for speculators who want to lever up and buy even more crypto or short it. Is that basically what it all is?
Yeah, I mean, BlockFi promised big returns with its lending products. People got excited. These interest-bearing accounts really quickly onboarded a lot of customers. So that means that BlockFi's downfall here is that much more powerful within the industry. People were definitely excited in seeing that this was a gateway to investing in crypto.
You know, it's interesting, too, and I'm looking at some of the reporting on it, that it talks about, let's see, the petition filed in New Jersey lists BlockFi's assets and liabilities at between $1 billion and $10 billion each. I mean, that's quite a range, right? Like, you do wonder, once again, about transparency, oversight, understanding, like, what's going on in the business.
Yes, it's huge. So we don't really know, the full list of creditors here. Those names haven't been disclosed. We know some of the top companies, FTX US, for example. And we also know that they owe $30 million to the SEC. They were previously charged with a $100 million penalty in February over its interest-bearing accounts. And we also know that Ankara Trust Company is a top creditor as well. But the rest of the names are not clear, not disclosed. So the full impact of this is yet to be determined.
And I'm not alleging any wrongdoing. I'm just saying it's just, again, it feels like a theme that comes up, Mike, is transparency, oversight, like, just kind of understanding what these businesses may be, what their exposure was and what they were up to.
Right, absolutely. It's interesting they seem to have put that fine with the SEC on layaway there. So they
wish I could.
Still have a few payments left to make. But Hannah, I was looking at Bitcoin, obviously, when that headline hit that they had filed for bankruptcy. As you said, a lot of people expected this. It wasn't a big surprise. Bitcoin did dip a little bit, but then it kind of came back to where it was, which is down on the day, but not a big dramatic sell-off. Is the contagion from FTX running its course? Are there other shoes to drop, do you think? And has the market priced it all in?
Yeah, so I think there are still additional shoes to drop, for sure. A lot of companies have remained really quiet about their exposure to FTX, which is totally understandable in this situation. And again, we don't know the full list of creditors for both FTX and BlockFi. So more names are likely to come out. When I've been talking to people, we're expecting to see a diverse group of names in terms of their exposure. So we're expecting to see institutional investors on this as well. And yeah, the market, did see a slight dip, but I think it's just, there are still things that are going to happen within the industry that could maybe have prices fall even further. Again, we don't know what the full extent of the contagion is, and I think people are pretty negative about the industry overall.
Hey, Hannah, BlockFi founded in 2017. Zach Prince, Florian Marquez, they founded the firm. Early days, it was a firm that had backing from influential Wall Street investors like Mike Novogratz, later on Valara Ventures, that's a Peter Thiel-backed venture fund, as well as Winklevoss Capital, among others. So, some well-known VCers, if you will, were certainly involved. How much of a chill are you seeing generally in the VC space when it comes to all things crypto following the collapse of FTX and as things continue to come out like the news on BlockFi today?
Yeah, VCs are pulling back from the industry for sure. So, and that especially applies to generalist investors who maybe have some crypto investments but aren't all in on the space. The thing is, too, is that VCs are bringing up questions about their own strategies in investing in crypto. They're looking at their due diligence processes. They're looking at what went wrong here with FTX. Why did so many big names back this company when FTX actually turned out to have a lot of internal issues? So I think VCs are reevaluating their strategies here. They're looking at what questions they should be asking, what research they should be doing, how can they improve their due diligence in this space amid this massive uncertainty.
All right, well, great to check in with you. Hannah Miller, she's digital currencies and venture capital reporter at Bloomberg News from our 960 studio in San Francisco. Catch her out on Twitter at HGMiller29. But I do feel like, Mike, every day there's just something that that comes off of the FTX story, either, a distinct connection or just peripheral.
Yeah, and to Hannah's point, that notion of due diligence is kind of mind-boggling at the moment when you think, did anyone really do the due diligence on FTX, given what we know now? I mean, did anyone really see their books and know exactly what was going on? It certainly doesn't seem like it.
No, it felt like a real big bank rush, gold rush, if you will.
Yeah,
right, to some extent, and certainly a very different tone now. All right, let's get back to world and national news. Nancy Lyons is in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Carol. The gunman who opened fire in a Buffalo supermarket back in May is now pleading guilty to a list of charges, including murder and one count of domestic terrorism motivated by hate. Erie County District Attorney John Flynn calls that historic.
No individual in the history of the state of New York has been found guilty of that domestic terrorism charge motivated by hate until today.
Flynn says today's plea on state charges from 19-year-old Peyton Gendron guarantees he will spend the rest of his life in prison. 10 black shoppers were killed in the attack, ranging in age from 32 to 86. Gendron also faces federal charges. Today is Cyber Monday, and spending is expected to hit a record. According to Adobe Analytics, U.S. online shopping is projected to top $11.2 billion. If that projection is correct, it would represent a 5.2% increase from last year. Catherine Cullen is with the National Retail Federation.
In addition to finding value, there's something consumers really enjoy about finding a great price on something that they really want, whether that's a gift or something they've had an eye on for themselves or their family.
Cullen says shoppers will likely see more deals of the hour to play into that treasure hunting mentality. Preliminary data from Sensormatic Solutions shows in-store traffic on Black Friday was up 2.9% from last year. At the World Cup, Serbia and Cameroon played to a 3-3 draw. Ghana defeated South Korea. Brazil beat Switzerland, and Portugal has a 1-0 lead over Uruguay. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Masser, along with Mike Regan, here in our Bloomberg Interactive Brokers studio. Tim Stenovic will be back tomorrow. I got to love it when there's a quote in a story that references Han Solo of Star Wars, because Benjamin Keyes, a real estate professor at the University of Pennsylvania's Wharton School, referring to a character in the Star Wars franchise, this is what he said. This is Han Solo in carbonite. This is a market that could stay frozen for quite some time. There really aren't any forces to unthaw it in a rapid way. So first of all, incredible quote, and he's talking about the U.S. housing market.
And Han Solo, I think that's what's called a geek test, Carol. I think.
I have a baby brother who's like all in on Star Wars, so I can't be critical. Gotta love it.
When you get the Han Solo,
I love me some Chewbacca. I'm just gonna say.
But apparently sellers listed 24% fewer homes in October compared with a year ago. A fourth straight month with a drop. It's deep freeze indeed. And we've got that Case-Shiller home index later in the week. So we'll see if the prices are getting hit as well as along with the listings. But, I guess the good news is that no one is worried about sort of a global financial crisis rerun because of this housing slowdown. Knock on wood, everyone I've talked to anyway. But certainly if you're looking to sell, you might want to wait it out.
Well, that's what it says. I mean, what's interesting is, first of all, you said sellers listed 24% fewer homes in October compared with a year earlier. Fourth straight month with a drop. That's according to data from Zillow. At the same time, purchases sank and are now 17% below their levels in October 2019 before COVID hit. We know during the pandemic, right, people were like, all right, if I'm going to be stuck at home, I need more space, and I'm buying homes and I'm moving out of cities. We saw that in a big way, and there was incredible housing demand. And mortgage rates were so low.
2.5% mortgages will do that. We'll see if 6% mortgages make you move back in with mom in the basement.
Well, this is the thing. They're saying trying to convince a homeowner to sell, especially if it means trading in a 3% mortgage for a much more expensive one. I mean, this is why, for the most part, probably people are just going to stay put and say, I'm not going anywhere.
Yeah, if you don't have to move, I think that notion of housing as speculation is off the table for the time being.
Han Solo in carbonite. Gotta love it. Check it out. It's at Bloomberg.com.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks are lower right now. Couple of reasons. Fed speak, also China woes. They're hitting sentiment. The S&P now lower by 66 points at 39.59, down 1.7%. Dow Industrials down now by 1.5%. We've got the Dow down 521 points. NASDAQ is down 191 at 11,034. The NASDAQ Composite Index, a drop right now of 1.7%. 10-year yield 3.68%, with the 2-year now yielding 4.45%. Gold down 0.8%, 17.41 the ounce. West Texas Intermediate crude higher, reversing earlier losses, up 0.9%. WTI right now at 76.95 a barrel. Again, recapping, stocks lower ahead of the close here, with the S&P 500 index down 1.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. UK Prime Minister Rishi Sunak recently denied a report that his government is interested in a Swiss-type relationship with the European Union, one that would put Britain back in the EU's single market. That's a pity. If Sunak and his ministers aren't indeed thinking about this, they should be. The Swiss model is based on a basic free trade pact, plus a raft of agreements aimed at harmonizing regulations, reducing frictions at the border, and partially recognizing the EU's 4 freedoms of goods, services, capital, and people. Importantly, the Swiss model respects the sovereignty that the UK wants to preserve. A streamlined version of this sort of arrangement, balancing economic integration and constitutional separation, could suit both Europe and the UK. Sunak would be foolish to rule it out. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
And we have just about 10 minutes left in today's trading session, getting ready to wrap up what will be a busy week, certainly chock full of economic data. We'll hear from Jay Powell. We talked about this. We're already hearing from members of the Fed today. But let's get to it with Anne Maletti. So great to have her back in our studio, head of active equity at Allspring Global Investments. She joins us here in our Bloomberg Interactive Brokers studio. Welcome back.
Thanks, Carol.
It feels good. Feels more normal.
It does. Great to be back.
Anything normal about this market environment, or how do you assess it?
Well, it's getting more and more normal every day.
Why do you say that?
Because the volatility, even though, I think, a lot of us look at the VIX and say, oh, that is volatility. I think investors in the market think, gosh, you never know from where the market starts in the morning to where it ends, what's really going to happen. I think we've had more 1% moves than we've seen since the Great Recession this year. And that's a lot for everyday investors to handle.
Well, so what are the conversations with clients like in an environment like that? And are people, doing the right thing and getting greedy when others are fearful, or are they fearful like everybody else?
Well, I think it's really challenging to get people who even who are in the business, professional investors, to take emotion out of the decision making and to really think long term when there's news flow every day, when things change all of the time. And so a lot of our conversations with clients are just about staying diversified, thinking about long-term, and looking at this volatility as opportunity and not just as a tough time, but what opportunity does it present for the next several years potentially.
Is it problematic, Ann, if you think about Jim Bullard coming out from the St. Louis Fed and talking about maybe a higher rate environment, not only next year but into 2024? Is that problematic? I mean, for equity valuations to still have to maybe come down even further, or just asset classes in general?
You know, it's a great question, Carol, and it's one that we've had to wrestle with for the last, more than 12 months.
Yeah.
The good news, I think, if there is a good side to this, is that the multiple compression has happened. A lot of it has been in it. The market's down more than 20%. That's all multiple compression. Earnings are still going to be positive for the year,
Right.
and consensus is still positive for next. I'm not so sure about that.
Yeah.
But that expectation has really, really been lowered. We're starting to see earnings also kind of come in a bit. I think we're going to see more of that. And so when you're an investor, not a trader, you go, okay, the future is different. And the cost of capital is more expensive. You have to build that into your modeling and into your fundamentals. And if you're running a company, you have to run your company a little bit differently than you have in the last decade.
Is the risk appetite just not there, do you think, among the CEOs, the CFOs to sort of, invest in their companies, to boost their buybacks, boost their dividends? Is that part of the issue, do you think?
I do think they're human, just like us, right? And they're captured by emotion and the unknown. And when you listen to the Fed officials, threaten of much higher rates, they are probably pausing. I think what our investment teams are really trying to stay focused on are what companies have the strength to weather however long the storm is going to be, right? And if it's just a shallow recession and short-lived, great. But what if it's longer? What if it's deeper? And I think managements, good CEOs, CFOs think through those scenarios as well. And if you look at balance sheets and free cash flow, those are metrics that allow you to have flexibility as a company for a long period of time and gain competitive ground even in downturns. And those are the types of companies our investment teams are really focused on right now.
And do you model for maybe a recession, whether it's shallow or a little bit deeper, but a recession where people are working?
It's so interesting, right? Because this is
just crazy,
the million-dollar question. It
Right.
is. Look, I do think we're going to see some weakness in the labor market. It's not showing up as quickly as some would expect, but we all know it's a lagging indicator.
Yeah.
We're seeing job freezes. We have seen layoffs in some of the tech companies. I think you're going to start to see it in some financial companies as well, likely as we head into the new year. It's going to show up in other places as well. It may not be unemployment levels that we've seen historically, and there's other reasons for it too, right? Just demographic reasons why we might not hit those low levels. So I think, never say never, never say the future looks different than the past, but there's a good possibility this one won't look exactly like they have in the past.
It could be different.
It could
this
be
time
different.
around.
Yep.
Yeah, well, I wonder, you sort of get the impression that with this huge rally we've seen in equities since the middle of October, that people are kind of, hoping or betting that the worst is over with inflation, with the Fed rate hikes. We have seen inflation, it's still hot, but it's come down. Interest rates have kind of leveled off. Is that wishful thinking, do you think?
I think, a little bit. There's been a lot of money on the sidelines waiting to get in, and I think people are worried about missing it. I do think there's going to be a
FOMO.
Yes, exactly. I do think there's going to be a little more downside risk here, right? We're not, again, earnings expectations have just started to come in a little bit this past quarter. I think we need to see more of that happen before we officially hit the bottom. And I also think investors cannot expect a V-shaped recovery brought on by policy or the Fed. And we've had that in the past. That's what's caused these huge inflections. I don't think we're going to get that.
So where would you commit new money at this point? You talk about the importance of free cash flow, key metric to watch. Excuse me. So, and where would you put new investments?
It's really hard to pick a sector. I would say, if you want a sector, healthcare is a good one because there's still innovation, there's still growth, there's still the possibility for dividends, and we know in recessionary time periods, healthcare has been an area that's had the least amount of EPS, of earnings pullback. Yeah. And in fact, it's been positive most of the time. Outside of that, there are a lot of attractive names in all kinds of other industries. And I think when we get too general about saying move away from tech or move away from industrials, we're painting things with a broad brush when there are unique opportunities in all sectors right now.
So be a stock picker.
Then be a stock picker. Exactly. Exactly.
Well, and I know you're a stock picker and preach the gospel of stock picking, but at some point you got to say these bond yields look attractive too.
They are, and you know, you got me there. It's one of those unique times where, you know, look, you've had bonds and equities go up. They're not supposed to be so correlated. You also had them painfully go down together. And I do think that the bond market is, you know, showing some really attractive areas for investors right now too. So again, there's a lot to be fearful of, but there's a lot of opportunity out there.
Like the optimism that's out there. Ann Maletti, who brought us that optimism, head of active equity over at Allspring Global Investments. Thank you so much. Thank you. Happy holidays. Hope we see you again soon. All right, folks, it is time to head over to our TV colleagues, our cross-platform coverage on radio, TV, YouTube, and Bloomberg Quick Take. We're counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast. We're joined right now by Carol, Slow and Low Master, as well as Mike Regan, who's in for Tim Stenovic today. We welcome our audiences across Bloomberg Television, Radio, and YouTube. Stocks, Carol, right now, near the lows of the day.
Yeah, they are near their lows of the day, so definitely a risk-off trade here. And I've been just looking at some of the home building names once again because we're seeing some underperformance there, also down about 1.5%. And great story by our Prashant Gobel on the Bloomberg terminal about that U.S. housing entering a deep freeze, sellers and buyers sidelined. So it does feel like, Mike, a very different market than what we saw when it comes to U.S. housing versus what we saw during the pandemic.
Yeah, Carol, I think the oil market's pretty fascinating today, too. You know, it seems like if you were looking for a sort of OPEC put about where this drop in oil prices would end, maybe we got it today a little less than 75 a barrel, and all of a sudden we're seeing stories about how OPEC may consider a production cut, Scarlett. So who knows if that's the floor, but for now it seems like people don't think OPEC is going to let it fall too much further.
And of course, concurrent with that oil story is what's happening with the dollar. The dollar's firmer. That is kind of been the case for a while now. But what's interesting, and Romaine, you're the one who pointed this out, is that the yen is stronger versus the dollar today. Of course, the yen has had an awful 2022. It's the biggest loser against the U.S. dollar. When you look at the 16 major currencies, losing 17% of its value. But today, it's firmer.
Yeah, we talked to Adam Cole a little bit earlier at
The new safe
Bloomberg
haven
over
again?
FX strategy over at RBC in Europe. We really talked about this idea that this is the moment where the yen finally gets its due, something you didn't see earlier in the year when people were seeking out the safe haven of the dollar instead of the yen or the Swiss franc. Here on this Monday afternoon, the closing bells in New York, and pretty much everything is down. The Dow Jones Industrial Average is going to finish the day down roughly 500 points, or 1.5%. The S&P 500, which actually opened at that 4,000 level, lower by 1.5%, going to close right around 3,964 and change. And I do want to point out that we came into today with that main point of support for the S&P was right around 3,991. So we broke below that, we closed below that, and now a look down at 3,942 as the next pivot point. The NASDAQ Composite lower by 1.5% as well on the day, and the Russell 2000 is the biggest underperformer with regards to the major indices, down 2% on the day, Carol.
Yeah, and Romaine, like you said, pretty broad-based selling and really no place to buy. If you look at the S&P 500, Scarlett, you have most of the names, 465 to the downside, 38 showing some gains. So really, you saw a risk-off trade in a big way.
Yeah, I'm looking at the industry groups as well. When you look at level 1, which is 11 industry groups, all red. You look at level 2, all red again, although food, staples, that retail part that is seen as a safer haven, that did a little bit better in that it didn't fall as much. And this is, of course, concurrent with that idea that people are choosing safety today, whether it's the dollar, whether it's the yen, and in this case, food, staple companies, household and personal products, and food, beverage, and tobacco.
All right, I'm a little nervous, but I'm looking at Tesla just barely holding on to a gain. It was up 3% at its highs today, but folks...
You like to live on the edge, don't you?
I do sometimes. Tesla up, I mean, call it unchanged, 0.03% of a gain here, 182.92, so almost 183 a share closing at. It was top in the NASDAQ 100 and S&P throughout the day. A couple of things going on. It's still down a lot from its November 2021 high, I should say, 54%. Reuters and New York Post coming out saying that Tesla plans to revamp the Model 3 production in the third quarter of 2023 to cut production costs and boost the appeal of that 5-year-old EV sedan. This is according to people who cite people familiar with the situation. Fidelity Select also boosted its holdings of Tesla, so that might have given some support earlier in the day. But again, call it flat on the day by the close here as the market turned lower. Shopify, Romain, you talked about this earlier, at its highs up more than 9%, finishing the day with a 3.4% gain. The company saying Black Friday sales that analysts see as strong, pointing to the potential for better than expected fourth quarter gross merchandise value, still down more than 70% year to date. And then this one, not a household name. We're talking about the ticker AXSM, Axum Therapeutics, soaring today, up 31% at the close. This is about a $3.1 billion market cap, now up more than 90% so far. Big float, though, 20% of the float is shorted. But the news, an experimental therapy for agitation in Alzheimer's disease patients, meeting key goals in late-stage trial. I feel like this is the holy grail when it comes to figuring out Alzheimer's. So anytime you see some promising news from one of the biotech space.
On this too.
There's so many what?
Head fakes.
I know, but I do feel like every few weeks we have another one, and then you're right, it comes undone. But nonetheless, for today, some enthusiasm.
If we finally get to this.
Yeah.
Well, Carol, let me give you some of the downers here. Apple, really the biggest drag on both the S&P 500 and the NASDAQ 100. Those shares down about 2.6%. This is after Bloomberg is reporting that these violent protests at Apple's key manufacturing hub in China are likely to result in production shortfall of close to 6 million iPhone Pro units this year. The shortfall could even be worse if these lockdowns and protests can continue further, the source told Bloomberg. And speaking of Apple, Walt Disney Company's returning chief executive Bob Iger held a town hall with employees today, and he was asked about all this rampant speculation that Apple might buy Disney. He responded, quote, "It's pure speculation." And he also said he has no plans to end a hiring freeze at Disney. Now, the stock was down before the town hall, but he didn't help it out with any of these comments, and Disney's ending down more than 3%. Also on the downside, Tyson Foods down almost 3%. That stock was cut to underweight from equal weight at Barclays, along with Beyond Meat, as you will, and Brazil's Marfrig. Analysts basically saying that customers have grown very price conscious, and they might start balking at rising beef prices. Romain, I don't know about you, but I'll pay whatever it takes for some good beef.
And a couple of other names to that as well. We should point out Credit Suisse, both the shares over in Switzerland as well as the ADRs here in the U.S. closing at a record low, down for a 10th straight day, and SoFi also at a record low here on the day. You take a look at the yield picture, not a whole lot changed here on the day. We did see deeper inversion on the yield curve on that 210s, down below -80 at one point, though it did rebound slightly, but still camped out right around -77 here. I think these yields, particularly on the short end of the curve, Scarlett, really going to come into play as we move into next week. Of course, as a lot of people then look forward to that Fed meeting on the 14th and some key economic data, including jobs report this Friday, and of course that big CPI report the day before the Fed makes its announcement.
A lot of event risk coming up. Something else that's coming up that I saw from Dave Lutz's notes, he's from Jones Trading. He made the point that on Wednesday, it's the fiscal year end for a lot of mutual funds. So you might see some window dressing on individual stocks. That is, fund managers buying up, some of the, basically selling out some of their positions, closing some of their positions to lock in gains.
Definitely
or to
moves
lock in
names,
losses.
right? It
Yes.
definitely moves names.
Yes. So that could play into things.
I have a question, Carol. I think when we joined you about an hour ago, you brought up the book comments from Bullard, and that clearly was kind of a turning point for this market. It was already in the red, but the losses steepened, and it was this idea here that the market, at least in his words, hadn't fully priced in the recession risk. What do you make of that?
Well, what's interesting too, and Romain, I've been thinking a lot about this in terms of when does the market start to look ahead? I'm thinking about the equity market in particular. When does it start to price everything in and start to think about, okay, the other side of Fed monetary policy? Bullard, by saying what he said, makes me think, and I think investors think, that, okay, maybe this is going to be a lot longer than we anticipated, and we can't start looking ahead. And I just think it's another factor that just reminds us that until the Fed brings down inflation, they're going to keep either rates high or they're going to keep raising rates.
Yeah, and if you want the contrarian take on that, Carol, some interesting comments out from Ed Yardini of Yardini's research today. He's saying the inversion of the Treasury curve is flashing a sign that long-term interest rates have peaked and that stocks have bottomed. He said, quote, yield curve inversions actually predict that the Fed's monetary policy is getting too tight. He said the Fed should be done tightening early next year as anticipated by the inversion of the yield curve since this past summer, Romaine. So good contrarian take there from Ed.
Yeah, but then it really just comes back down to what market expectations are. I mean, when you talk about not only their expectations in terms of what's priced in, but their expectations when it comes to inflation and the other recession risk here. And I think this is kind of what Bullard was getting at, is that maybe they're not as realistic, I was going to use the word pessimistic, but realistic as Bullard thinks they should be.
And of course, it all depends on the data, because that's what the Fed is going to be looking at. Jay Powell will be speaking on Wednesday before PCE deflator comes in. That's the inflation metric that the Fed pays most attention to. That comes out on Thursday at 8:30 a.m.
That's been going down, though, that core measure.
That has been.
I mean, it's not fast,
year
but
over
it's going
year,
down.
core deflator is only 5% versus 5.1% in November.
Right, so this isn't
or I should say September.
This
so
is in the 1980s. I mean,
no, nothing.
So it's
is
come
high.
down a lot, right?
Yeah.
So does that pace continue, and does it say that maybe the Fed has done its job?
There seems to be a lot of folks we've talked to, strategists and economists, who say that it's actually going to accelerate that drop, not necessarily because of the Fed, but because of a lot of other conditions that are independent of the rate hiking cycle.
I guess.
Indeed.
Which is why these data points this week are going to be interesting. And Jay Powell, let's see the tone when he speaks in those questions on Wednesday. All right, we got lots more. What?
It keeps us employed, Carol.
What? Okay, I just want to make sure you're done.
Divining what the Fed's going to do next.
I love you guys. All right, that's a wrap for our cross-platform coverage. We call it Beyond the Bell, radio, TV, YouTube, and Bloomberg Quick Take. We will see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Our thanks to our TV colleagues, our market chat, lots of questions, but it is interesting to see the Fed speak and see what maybe Jay Powell and Mike will ultimately do on Wednesday. What's the tone that he takes?
I think he's going to reiterate what he's already said.
No shockers.
Yeah, I think, everyone's braced for 50 basis points. I don't think he's going to upset the apple cart and change those expectations at all. He will, I think, make it clear that perhaps they'll go longer into next year with higher rates and make it clear that there's no...
But do they do what Bullard did instead of going into 2024?
Quote unquote Bullard. I think Bullard likes to be out on the vanguard of the hawkishness. So
But he was right early on.
Yeah, true.
All right, but I get you. All right, let's get back to world and national news. Nancy Lyons, she's in her 99.1 newsroom in Washington. Hey, Nance.
Thanks, Carol. It is the biggest online shopping day of the year, this Cyber Monday. Retail analyst Bert Flickinger says the numbers are progressively getting better despite inflation.
Cyber Monday should generate over $11 billion today, which is good, not great, but it exceeds what Amazon generated in Amazon Prime Days last month.
Flickinger says it may pay off to wait even a little while longer before you buy. The Buffalo supermarket shooting suspect is pleading guilty to state charges. He was accused of killing 10 black shoppers back in May in what's been described as a racially motivated attack. Erie County District Attorney John Flynn says Peyton Gendron heard each name read today.
I felt it important not only to the families, but this community, that every name be listed in the indictment and that he plead guilty to every single name that he murdered.
Flynn says Gendron faces life in prison without parole. Chinese authorities are easing some antivirus rules, but are affirming their severe zero-COVID strategy, even after protesters demanded President Xi Jinping resign. It's the biggest show of opposition to the ruling Communist Party in decades. This protester says they want their voices heard.
We want basic human rights. We want freedom. We want to free our country from this unfair, absurd regulations.
China's lockdowns could have a ripple effect across the global economy. At the World Cup, Serbia and Cameroon played to a 3-3 draw. Ghana defeated South Korea. Brazil beat Switzerland, and Portugal won its game against Uruguay. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
Thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Master along with Mike Regan in our Bloomberg Interactive Brokers studio. And this story, especially if you're thinking about traveling, maybe you won't go to Hawaii. I don't know, or at least one of the islands.
Well, yeah, unless you like volcanoes.
Who doesn't love a good volcano?
I don't know. This one sounds like you might want to stay away from it. The volcano began erupting around 11:30 p.m. local time Sunday, blanketing the sky with ash. Officials have not issued evacuation orders, and air traffic remains unaffected. So I don't know. Maybe it's time to get a good deal on a trip to Hawaii after all.
I guess. We should tell them exactly what we're talking about. Hawaii's Mauna Loa. It's the largest active volcano on Earth, erupting for the first time in nearly 4 decades, prompting local officials to issue ashfall advisories and open emergency shelters. It was, I guess, this volcano, it's 2.5 miles, 4 kilometers above sea level. It is the largest of 5 volcanoes that make up Hawaii's Big Island. It has erupted 33 times since 1843, most recently in 1984. The nearby Kauai volcano, hopefully I'm saying that correctly, but I'm guessing not. But anyway, it spewed ash 30,000 feet into the air in a 2018 eruption, limiting air traffic and prompting evacuations. This stuff's serious.
I was amazed, 2.5 miles above sea level. So this thing is twice the height of Denver. That's amazing.
That's pretty wild, right?
Yeah.
Like if you think about it.
Right. Be a good ski slope if it wasn't in Hawaii, I guess.
Yeah, exactly. But we've seen this happen before. Volcanoes and certainly what it can do in terms of air and the airspace, disrupt air travel. If it gets even more serious, certainly could impact, I guess, the people around there. I don't know exactly how many people live around there. It's probably not. I'm assuming not too many.
It's so high up, I guess not too many. But
Right.
actually, another volcano erupting in El Salvador as well. So, so two volcanoes at once.
Yeah.
End of times, maybe.
I don't know. Anyway, obviously you can read more about this. Just head to Bloomberg.com. You're listening and watching Bloomberg Business Week. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelletier. Losing day to start off the new trading week. The Dow, the S&P, and NASDAQ all declined. Today's stock sank as Fed officials stress that more rate hikes are coming. Also, those China woes are boosting havens. That helps send stocks lower. S&P fell 62 points today, down 1.5%. The Dow down 497, a drop there also of 1.5%. NASDAQ lower today by 176 points, a drop of 1.6%. The 10-year, 3.63%, with the 2-year yielding 4.44%. The spot gold at $17.41 the ounce, down 0.8% today. Crude, though, had an up day of 0.5%, $76.62 a barrel on WTI. Bitcoin down 2.2%, 16,203. Disney's returning CEO Bob Iger told employees at a company town hall today that he will look into some of his predecessors' more controversial decisions, including requiring reservations for guests attending theme parks and moving thousands of staffers to Florida from California. Shares of the Walt Disney Company today down 3.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for the update. Well, just over 2.5 million passengers passing through U.S. airport checkpoints yesterday, Sunday, according to TSA data. That's the most in a single day since before the COVID-19 pandemic, and up about 4.5% from the same day last year, again, according to the TSA. Still, the one-day tally fell about 11% shy of the same figure back in 2019 when 2.88 million travelers were screened. But bottom line, Mike, there's a lot going on. People are traveling.
Absolutely. Still seems like a lot of pent-up demand. You know, people who canceled vacations and visits to their family during the pandemic, really trying to still get them in now. So I don't know. It's a good time to travel, I guess.
All right. Well, let's see what our next guest has to say about that. Priceline CEO Brett Keller joining us via Zoom from Norwalk, Connecticut. Priceline, of course, a subsidiary of the publicly held Booking Holdings. Brett, good to have you here on Bloomberg Business Week. Tell us about the activity that you guys are seeing. Have you been traveling a lot lately?
Yes, I have actually. I just got back late last night from a trip out west. The plane was completely packed. You know, a little bit of a delay coming into New York, but overall, you know, the Thanksgiving period of travel across the country was very smooth.
You know, Brett, obviously inflation's been the hot topic all year. I'm wondering what you're seeing as far as prices in the travel, hotel, airfare, that sort of thing. Are they rising as much as, CPI would suggest, something like 7-8%?
Actually, a little hotter than that. Depends on, whether you're booking a flight or booking a hotel, but they're both up. On the hotel side, prices up 7-8% versus where they were a year ago today, so a little less than the CPI. But when you look at flights, they're closer to 15 to 20%, especially if you're flying overseas. So with the cost of jet fuel, really up 50% where it was a year ago, that's pushing prices higher along with labor costs. And consumers seem to be shaking off those higher prices. They continue to prioritize travel over other purchases and are really hitting the road. So here at Priceline, we're really seeing good, healthy travel demand. October actually accelerated from where it was in August and September. As we look into next year, patterns seem to be holding up, at least so far.
So are we back at 2019 levels based on what you're seeing off your platform, Brett?
Yeah, we're very close on the hotel front. If you just look at industry data broadly for the hotel category, their occupancy rates are just about where they were in 2019, maybe a percentage point below, but very healthy. On the flight side, even higher in the 90s in terms of, seat capacity utilization. So things look pretty good in the industry right now. And, consumers no longer have any COVID concerns, especially here in domestic travel in the U.S. And we're seeing a really strong demand into Europe and now starting into Asia as they've lifted restrictions there.
Let me just to follow on that. So I am always curious, Brett, on a platform like yours, I mean, how much visibility do you have looking out? Is it a couple of months? Is it 6 months? Is it 12 months? What kind of visibility do you have in terms of what the environment might be for travel heading into 2023?
Sure. Well, the average booking window for a consumer booking out into the future is usually pretty close in, 2, 3 to 4 weeks. That's really where most of the bookings happen. But we do see, well into the future, people will book out 2, 3, and 4 months for certain types of vacations. And so that's a good proxy for what we're seeing. And so far, that data looks pretty good. Things are still relatively healthy as we look into the future, into first quarter of next year. So, demand, again, appears to be holding up, and we'll see where it goes from there. But so far, we're happy with how things are playing out in the travel space.
Brett, I think probably a lot of listeners hit your site looking for a deal, of course. Are any tips on how to save a few bucks in this holiday season, considering prices of everything are higher? Are there any sort of tricks of the trade you could share with us?
Yeah, absolutely. Listen, this is why Priceline was founded, 25 years ago, was to help consumers navigate a very complex space and find savings. So when you think about ways to save money today in this really high-priced environment, one is you really need to avoid these high peak travel dates if your schedule allows. And more consumers are able to do that now. So, for example, with the upcoming holidays, try your best not to fly on the 23rd and the 27th, right before and right after a Christmas holiday, or the day after New Year's Day. Really try and push that out a couple of days. You can save 15 to 20% because they really optimally price for those dates from the airline side. A second way is on a site like Priceline, you can book with mixed carriers. You can fly out on one airline, fly back on another. That can typically deliver you anywhere from 5 to 10% off of what you would pay if you flew out and back on the same carrier. So by mixing and matching carriers, you can save money. And a third is to package, right? And bundle your bookings together. So if you're going to book a hotel and a flight, bundle those together. You will save money because we have access to specially negotiated rates that can only be used in that bundled experience. And that does deliver real value, up to, a couple of $100 a trip when you really are thoughtful about destinations and how you book those together.
All right, we're going to continue with Brett Keller. He's the CEO of Priceline, joining us from Connecticut. We'll continue with the conversation. So, Mike, you've got some tips. You ready to book some travel?
Nah, probably still not.
Really?
I'm a homebody at the holidays.
I love getting on a plane.
Maybe
I'll
early
go
next
anywhere.
year.
Maybe next year.
Spring
early
break.
Next year. Spring break, planning ahead. All right, you are listening and watching Bloomberg Business Week. We're live in our Bloomberg Interactive Broker studio, streaming on YouTube as well as Bloomberg Quick Take. Just a reminder of how markets closed on this Monday, first trading day of the week. The S&P 500 down 62 points for a loss of 1.5%. The Dow Jones Industrial Average down just shy of 500 points, a decline of 1.45%. And the NASDAQ down almost 1.6%, down 176 points. Big week full of economic data. We will hear from Jay Powell before the Fed goes into a quiet period ahead of that last Fed meeting of 2022. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening and watching Bloomberg Business Week on this Monday. Carol Massar along with Mike Regan. We're going to get back to the CEO of Priceline. Brett Keller is still with us. Talk to us about some of the travel industry trends that we are seeing at this moment. In the meantime, let's get a reminder of how stocks closed on this Monday. Back over to Charlie Pellet we go.
Thank you very much. Down day, kick off the new trading week. Lots of red on the screen. S&P today down 62, down 1.5%. The Dow today down 497, down by 1.5%. NASDAQ today down 176, a drop there of 1.6%. We did end the day very close to session lows. Stocks sank as Fed officials stressed that more rate hikes are coming, with risk appetite also hit by uncertainties around China's COVID curbs and their impact on the global economy. 10-year yield today 3.67%, with the 2-year yielding 4.44%. Spot gold 17.41 the ounce, down 0.8%. An day for West Texas Intermediate crude up 0.4%, 76.56 a barrel. Well, as for the overall market backdrop, Ann Maletti is head of active equity at Allspring Global Investments, and she was our guest right here on Bloomberg Business Week.
I think investors in the market think, gosh, you never know from where the market starts in the morning to where it ends, what's really going to happen. I think we've had more 1% moves than we've seen since the Great Recession this year. And that's a lot for everyday investors to handle.
Apple shares down 2.6% today. Sources tell Bloomberg turmoil at Apple's key manufacturing hub of Zhengzhou is likely to result in a production shortfall of close to 6 million iPhone Pro units this year. The CEOs of Kroger and Albertsons will testify before the Senate tomorrow about their company's proposed $24.6 billion merger. Peloton shares gained today as Adobe Analytics said exercise equipment, quote, performed well on Black Friday, with sporting goods category sales surging over the weekend. Today we did see Peloton up by about 0.8%. Recapping, stocks lower, S&P down 1.5%, 10-year yield 3.67%. I'm Charlie Pellet. And that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, Bloomberg Business Week, we are brought to you by SEI with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC.com/tech. All right, Carol Massar along with Mike Regan here on Bloomberg Business Week. We're talking with Brett Keller, CEO of Priceline, still with us via Zoom from Norwalk, Connecticut. Brett, you guys do have lots of data. You can see in real time like what's interesting to people. What are the most popular flights that people are booking right now?
Well, coming out of 2021, consumers really stayed close to home, and many of them were not really even leaving the country. And so we've seen big markets really start to open up this year, especially for Christmas and New Year's. So New York, Atlanta, Las Vegas, LA, all very, very top of the charts right now. Also Orlando. That's always been a number 1 or number 2 market for us in particular, but really for the country. And it continues to be a top market for consumers. But what we're seeing a lot more the second half of 2022 is people are leaving the U.S. to travel overseas. And when you look at where they're going in Europe, obviously London is a big market, but they're also heading into many other interesting destinations there, and a few now moving into Asia. But really, for the holiday period, warm destinations are at the top of the list. Locations like Cancun, Jamaica, Dominican Republic are very, very appealing to consumers just looking to get a break and get some sunshine.
A colleague of ours here said, yep, we just came back from Jamaica, and I have to say our producer, Paul Brennan, actually over in Madrid with his family spending Thanksgiving there. And so, yeah, people, Mike, are out and about, and they're getting out of the U.S.
I'll take any of those destinations, I think, at this point.
Yes, yes, and yes.
Hot sand, a golf course, swimming pool, one of those drinks with the umbrella. But Brett, it's such an unusual economic environment that we're in right now. We have high inflation, but super low unemployment. Everyone's worried about a recession. I'm wondering which of those variables matter the most to your business. Is it unemployment? Is it GDP? Is it inflation? My guess is unemployment is probably the main thing that would sort of be a headwind to travel. Is that a fair assumption?
Yeah, I think that's a fair assumption. I've been in the industry for over 25 years. We went through this back in '08, and travel is a very resilient category. People, seem to prioritize that. They always want to have that opportunity to visit family, to take a break. And so, if you're unemployed, obviously that makes it very, very challenging to pull together the dollars that's required to take a trip like this. But what people will typically do if they're constrained is they'll start to, modify how they travel. They may drive instead of fly. They may, drop down a star category. They'll find ways to save money but still take that trip. And we're not necessarily seeing that trade down happen yet, but certainly that's what consumers may, end up doing if they're really pressed for cash.
Brett, we spend, I feel like, every day in and out here at Bloomberg because of the upcoming Fed meeting, because of the Fed conversations, because of Jay Powell speaking this week. We talk about, the prospect of a recession, whether it will be shallow, whether it will be deep, whether the Fed will overdo it. What's the constructive conversations you guys are having at Priceline when it comes to the economic outlook and the possibility of a recession?
Sure. Well, that's obviously on everyone's mind here as well as we read the news and everything that's going on in the category.
Right.
What's interesting, though, is so far the hotel chains, the major airlines, they are all signaling good, strong, healthy demand for their product. And a lot of that obviously is because of consumers not being able to travel for really a good year and a half. And so that's propelling travel forward. And, when you think about what consumers are looking to do with whatever extra cash they have, they are prioritizing this now over really commodities. So, as we think about a recession, we're thinking, yeah, this could be obviously harmful to the industry longer term, but we just don't see that. And historically, when you look back to '08, it weathered that very, very well as well. So we're very optimistic about the next couple of years, even in the face of what could be, a recession. But, you can't predict the future anymore. It's becoming a bit too challenging.
Brett, quickly, I was looking at some of the notes you sent us before the show, and cruises. The price you gave, the low price for a cruise ship per night, made my eyes pop out. Is that a typo? $70 a night you can go on a cruise for?
No, that's absolutely an accurate figure.
Wow.
In fact, that's one of, and most people don't know this, it is one of the most cost-effective vacations there are, because it typically includes obviously food and beverage as well. So you bring that together, it's a really nice vacation. Now you have to get yourself to a cruise port, but there are ways to either drive there or find a cheap flight to get you there to then get you onto that cruise line. And now, the cruise lines obviously had a tough time through COVID and continue to have a lot of excess capacity, more so than many of the other travel categories. Right. So they're really rolling out the credits and other things to get you onto those ships.
Yeah, I just talked with the CEO and CFO of Royal Caribbean for an upcoming Bloomberg television broadcast, and they seem pretty optimistic about the outlook. They're pretty busy. All right, Brett Keller, thank you so much, CEO at Priceline, joining us via Zoom in Connecticut. All right, back to World and National News. Nancy Lyons, she's in D.C. Hey, Nance.
Thanks, Carol. The gunman in the Buffalo supermarket mass shooting back in May has pleaded guilty to all state charges. Authorities say 18-year-old Peyton Gendron targeted the Tops Friendly Market because it was in a predominantly black neighborhood. He killed 10 people and wounded 3 others. This is Gendron's defense attorney, Brian Parker.
Before he is sentenced to life without the possibility of parole on February 15th, the surviving victims and deceased victims' family members will all have an opportunity to address the court, the community, and our client directly.
Brian Parker says his client's plea represents a condemnation of the racist ideology that fueled his actions. Hawaii's Mauna Loa, the world's largest active volcano, is starting to erupt for the first time in nearly 4 decades, prompting volcanic ash and debris to fall nearby. U.S. Geological Survey scientist Ken Hahn.
It's going to be very fluid and fast-moving lava.
Hahn says the chances of the lava flow interrupting the tourist industry, though, is very, very slim. Congress is returning to Washington this week for the remainder of its lame duck session. Top priorities include keeping the government open past December 16th by passing a spending bill and reauthorizing annual funding for the Pentagon. In the Senate, Democrats want to codify same-sex marriage and pass a bill aimed at protecting elections. The number of Americans smoking cigarettes has reached a record low. A new survey from Gallup puts that number at just 11%. The World Cup, Serbia and Cameroon played to a 3-3 draw. Ghana defeated South Korea. Brazil beat Switzerland. Portugal won its game against Uruguay. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. All right, we've got a story we want to share with you, but I just have to share with you something. I just picked up my phone, and my daughter finally has her driver's license. After several years, COVID, yay, I think, until I have to pay the insurance premium. But after years of not years, but delayed a little bit because of COVID, scheduling, then rescheduling, and then New Jersey DMV, who we love, kind of no, we really don't, because it can be frustrating, and then having to go back and take the test again, do it all over again. I've got another licensed driver in the family.
Well,
anyway,
congratulations.
Now she can go to the shore. Thank you. It was like,
your Uber driving days are over now.
Exactly. Cross it off the list. Not crossing off the list is, you know what, Mike, we're going to wait and see what kind of political conversations we have with this new Congress following the midterm elections, because a story by our Laura Davison of Bloomberg News says Republicans picking a fight with woke corporate America. In other words, corporate America thinking about diversity, inclusion, doing things right according to what consumers want, and Republicans maybe want to go in a different direction.
Yeah, right. And most directly in the GOP crosshairs, according to this story, is the U.S. Chamber of Commerce, of all people, under pressure from the likes of House Speaker Kevin McCarthy to not be so woke, I guess. What's the opposite of woke? I guess you go back to sleep? I don't know.
Unwoke? I don't know. Yeah, asleep. But what they're saying is a messy breakup between Republicans and their longtime corporate allies, because companies, equality, climate goals run headlong into a GOP movement exploiting social and cultural issues to fire up conservatives. I mean, there are some different thoughts within the GOP. We know that, right?
Yeah, right. We saw with Governor Ron DeSantis in Florida with his campaign against Disney because of some of the statements they made. So I don't know. It's kind of a risky political strategy, if you ask me. I don't know if you're Ron DeSantis picking a fight with Disney, but hey, he got reelected, so I guess it works.
Where will the money, right? The political backing left,
right.
the money that comes from corporations. Anyway, great story by Laura Davison. Highly recommend you head to Bloomberg.com to check it out. We're going to talk more too about the art of conscious conversations. That's our next guest. It's coming up on Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down day on Wall Street. The Dow, the S&P, NASDAQ all ending close to session lows. Lots of red on the screen today. Stocks sank as Fed officials stress that more rate hikes are coming, with risk appetite also hit by uncertainties around China's COVID curves and their impact on the global economy. S&P down 62, a drop there of 1.5%. The Dow today down 497, lower by 1.5%. NASDAQ down 176 points today. That was a drop of 1.6%. The 10-year yield, 3.67%, with a 2-year yielding 4.44%. Spot gold today down 0.8%, $17.41 the ounce, while West Texas Intermediate crude up 0.4%, $76.55 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you. Appreciate that. So the holiday season off and running. Many headed to spend time with families over this past week and weekend for perhaps the first time in 2 or 3 years because of the COVID pandemic. Great reunions, yes, we know that. But Mike, it can also be a charged time when it comes to conversations around the dinner table and more, right? We hear about stress and all that good stuff.
Absolutely. No politics, please.
My husband always used to be like, don't, because I always used to bring up politics at dinner. All right, so our next guest can probably help all of us with that. His book, The Art of Conscious Conversations, Transforming How We Talk, Listen, and Interact. Let's get to Chuck Wisner. He is someone who has worked with leaders and their teams at Google, Ford, Tesla, Shell, General Motors, and Chrysler. He joins us on the phone on this Monday. Hey, Chuck, nice to have you here with us. Did I say your last name correctly?
It's Wisner.
Wisner, forgive me, my bad. Chuck Wisner.
Like W-I-Z, Wisner, yeah.
Wisner, okay. Okay, Chuck, well, good to have you here with us. And let's talk about your book, because you have worked with a lot of companies. Tell us about your background and the work that you've done in the past.
Okay, well, I'm actually formally trained as an architect, and I changed careers because I couldn't stand the conflict, and I figured there was a better way to have conversations. And so I studied the ontology of language and did mediation training, and all of that one thing led to another, and I changed careers. And then I've been working with leaders and their teams for the last 30 years.
So, Chuck, when you talk to these executives, what are sort of their goals to improve conversation? Is it, they want to have more personality, be more engaging? What are they looking to do?
Well, it varies, but I think the biggest problem is often there's a lot of miscommunication. And there's a lot of misunderstanding for leaders about how powerful their voice is. And I say that as an example, like a leader could be in a meeting and say, well, that was really a stupid idea. And they think they're just sort of bantering about. And someone could leave that meeting thinking, oh, gosh, I'm really in trouble. I might get fired tomorrow. So there's authority issues and issues of power in their voice. And then there's also a lot of leaders forget to create a good story and enough context for people to really understand what they're doing. And so having a clear mission, context, and then being really, really mindful of how to create psychological safety so you can have robust conversations is one of the biggest things we work on.
So, Chuck, I got to say that in reading in and looking at your book and looking at your background and knowing that you worked with Tesla, I was dying to ask you, how do you think Elon Musk is doing?
Well, Elon, I think, needs to take a little breath and step back from the circus that he's involved in, because building a car or building a rocket ship is really different than what he's entering into now. It's such a different kind of way. It's such a social, cultural format that everything that he does and everything that he says, again, carries a lot of authority. A lot of people listen to him. And so I think he needs to find a little bit more courage to step back and really decide what he wants to do and speak more mindfully.
Yeah, Chuck, I wonder what you've learned about successful executives when it comes to sort of the art of conversation. Is it, dominating a conversation, does that sort of correlate to success in the business world, or is there more to it than that?
I think that's the biggest downside. So leaders get to where they get to because they were expert engineers or expert tech people or whatever, and then they get elevated. And we actually are, and they are, rewarded for having the answers. But the higher you get in an organization, the less you can have all the answers for all the problems that you face, or less you can know about everything that's going on in an organization. So actually, a great book years ago called Good to Great, they were trying to figure out why companies that became great instead of good, what happened. And they didn't want to focus on the leader, but one thing that kept coming through and through and through is these leaders that were doing the great companies, they had a humility that allowed them to trust their experts, allowed them to trust their team, and to create a space where they could have really open, honest, creative, and good conversations. So humility is a better attribute than, say, arrogance and thinking you have all the answers.
So who's a CEO or leader, could be any walk, that you think is just spot on when it comes to conscious conversations?
Okay, that's a tough question. I have to be careful because all my work is so confidential. I certainly have worked with Doug Field, who was at Apple and is now at Ford, who really takes this stuff to heart, and his ability to communicate with folks, to create the excitement around the mission, and then to really allow people to bring in the best people and draw the best people and allow those folks to do great work. I think he's one example. And in the past, I'm thinking of a few, another energy company that I won't name, but that I've worked with, and where that leader really transformed from not understanding sort of ideas about business culture to realizing how much culture shapes the success and the way companies do their work.
Chuck, Carol and I were joking at the beginning there about no politics during the holidays, no politics conversations. But politics have gotten so divisive in this country. And I wonder how that affects conversation. Is it best to just not go near it, or is there a way to actually talk politics without sort of wanting to wring the other person's neck by the end of it?
Right. Yeah. I think we've gotten to a point where I might have had a different answer 6 or 8 years ago than I have now. Right now, I think we've gotten to a point where we're so off the mark as far as being able to listen and hear one another that we can't just jump into a political conversation and start, touting our position or, pushing our position. I think the fundamental problem is that if you're in a conversation that sort of doesn't feel right, the best thing you can do is just to stop talking about what your perspective is and step back and say, are there a few facts we could agree on? Because fundamentally, we have lost that art of saying, wait a minute, what do we know and what don't we know? And if we can't agree on that foundation of facts, you're not going to get anywhere in a conversation. And in fact, I've walked away from multiple conversations and multiple group dialogues where I couldn't get the group or the people to just settle down on some fundamental facts.
I was talking to my sister about this in terms of social, like, don't get angry and start kind of being nasty in terms of someone's view. Just put out some facts and say, and kind of respond in that way. Chuck, this was fun. I hope you can come back real soon. Chuck Wisner, he is leadership advisor and author. His book, The Art of Conscious Conversations, Transforming How We Talk, Listen, and Interact. Mike, thank you so much.
Thank you, Carol. Great conversation there. A great conscious conversation.
This is Bloomberg.